here, and we are really happy to have you all. We'll be kicking off right now with a keynote speech. Our keynote speech is going to be delivered by Akeem Lawal. Akeem is MD, Payments Processing and Switching, Pure Pay at Interswitch. Please let's put our hands together as the MD comes forward to give the keynote speech. We can do better, we can do better. This is Akeem climbing the stage. Please. Let's do better.
Let's give the applause until he gets to the podium.
Thank you. Thank you. Thank you, Akeem.
Thank you very much. Thank you for the applause. I appreciate it. Good morning. It's not morning anymore. Good afternoon, ladies and gentlemen. Thank you so very much for honoring our invitation. And I want to start by welcoming you all to Interswitch TechConnect 4.0. I've been asked to read a speech, and I will, to the best of my ability. And the keynote speech is titled, Bridging Gaps in Africa's Diverse Markets, Leveraging Payments as Growth Engine for Business. But before I dive into the speech, I think it's really important to say a special thank you to many of our customers, our partners who have come to honor our invitation today. Please help me give a round of applause to all of our customers and our partners who are in the room this morning. We welcome you and we thank you so very much for coming. Distinguished guests, industry leaders, innovators, change makers. It is my honor to address this gathering of visionaries and disruptors who are reshaping the financial landscape of Africa. Today, I want to delve into a topic that is both the backbone and the frontier of Africa's economic future, and that is payments. It is the essential artery of commerce and a potent lever for economic growth. The African landscape has a number of challenges and opportunities. Africa is a continent of contrasts and opportunities. We have more than 54 nations. We have over 2,000 languages and a population exceeding 1.4 billion. It is rich in diversity, but is marred by fragmentation. This diversity brings challenges. The various regulatory environments that we have to navigate, the differing levels of financial inclusion, the inconsistencies in technology infrastructure. But it also unlocks unparalleled opportunities for innovation. The way I like to say it is that for us in Nigeria and in Africa, innovation is not an option. It has to be a way of life because our problems are unique and the solutions must be unique. Consider this. By next year, Africa's digital economy is projected to contribute over $180 billion to GDP, and payments will form the lifeblood of this growth. Yet, as at today, nearly 60% of the continent's population remains unbanked and underbanked. In Nigeria, that is also true. And here lies the paradox. The vast majority of transactions occur outside formal financial systems, yet the appetite for digital financial services has never been greater. We think that payments is the growth engine. And payments for us is not just transactions. They are enablers of trust, trade, and transformation. When we solve the payments puzzle, we unlock a cascade of benefits for businesses and for communities. Number one, we will solve the issue of access to markets. Seamless payments and seamless payment systems open the doors for businesses, whether large or small, to access customers across the continent. Imagine an adire manufacturer in Lagos selling goods to a buyer in Accra without worrying about the cross-border payments complexities. The second is financial inclusion. Digital payment solutions will bring marginalized populations into the economic fold, enabling them to save, to borrow, and to invest. This will foster entrepreneurship and will drive grassroots innovation. 3, efficient value chains. Streamlining payment processes will reduce cost. It will mitigate fraud. It will enhance transparency for businesses. This efficiency will strengthen supply chains and make our industries on the continent more competitive globally. 4, data-driven growth. Every transaction generates data. And in this era, data is gold. So payments generate gold. Insight from payments behaviors allows businesses to personalize their services, to predict trend, and to make strategic decisions. It will also help us to solve the problem of lending to the people who do not have access to loans because they do not have access, they do not have credit history or data. How do we bridge these gaps? How do we harness the power of payments to bridge the gap across Africa's diverse markets? The first thing that we must do is to build the infrastructure for interoperability. Fragmentation is the Achilles heels of Africa's payment. A payment solution in one country does not work in another. To bridge this gap, we must prioritize interoperable systems that seamlessly connect borders, currencies, platforms. We must take full advantage of the Africa Continental Free Trade Agreement because it offers a perfect framework to accelerate this integration. Secondly, we must champion collaboration across sectors. We as Interswitch, we believe that the problem of African payments cannot be solved by just one entity. We believe it is a collaboration. We don't think that one single entity can address the scale of Africa's payments challenges, whether that is a financial institution or a fintech company. We need public-private partnerships. We need fintech collaborators. We need policy alignment, and these are all critical. Regulators must work hand in hand with innovators to create an enabling environment. We have an advantage that the rest of the world doesn't have. We have the largest mobile adoption rate globally, and it is one of the platforms on which we must build the solution to this problem. With over 600 million mobile connections, our continent is proof that leapfrogging is possible. Fintech companies must continue innovating with mobile-first solution, making payments accessible to even the most remote communities. All of this must be built on an infrastructure that is solid in terms of cybersecurity and trust. Trust is the bedrock of any payment system. As digital transactions grow, so do risks. Strengthening cybersecurity measures and educating customers about digital safety are paramount to sustaining growth. And finally, to bridge the gap, we must expand localized solutions. One size does not fit all. We are an experienced party in doing business in Africa. We have many of our partners here who do the same. One size does not fit all. Solutions must be tailored to the unique needs of each market, considering cultural, economic, and technological nuances. And localization is not just a strategy, it is a necessity. How has Interswitch contributed to bridging these gaps over the last few years? We and many of our partners have been working to solve the problem of Pan-African payments, right? Breaking down the barriers with products, services, and technologies and innovation in these payment systems. In the last couple of years, we've structured our business into 6 strategic businesses to drive this agenda. We've created a business that helps to solve the cost of access with our Verve domestic card scheme, which is now the biggest payment platform or payment scheme on the continent with more than 70 million cards issued across 16 countries. We have a business that is focused on solving the payments infrastructure deficits with our switching and payments processing infrastructure, with switches now in Nigeria, Kenya, Uganda, Gambia, and DRC most recently. We have a business that is focusing on solving the digitization of industry ecosystems. We know that you cannot do payments if the back office is not digital. And because of that, we have a business that is primarily focused on building and digitizing industries. We've been working in government for many years, social services, energy, transportation, health, and so many other industries that we're trying to digitize to make it possible for digital payments to then run on those infrastructure. We have a technology business that is solving the technology, security, and infrastructure deficits. Many of our customers here use technologies that Interswitch has deployed to solve one problem or the other, whether it's issuing of cards, driving of ATMs, or even if it's in your fraud tool. We've taken technology solutions from many of the international accredited providers, and we've localized them to meet African needs. We're solving the problem with commerce and payments by creating our commercial inclusion business that are offering solutions to merchants, to businesses, to individuals. And I think finally, we are driving and leading the way when it comes to promoting partnerships, collaboration, and innovation. And one of the reasons why we continue to host the TechConnect series is to achieve exactly that. Many of our partners are here. We're currently working on building a Pan-African integrated payments ecosystem where we hope to create a partnership-based solution for African cross-border payments. Ladies and gentlemen, payments are not just tools for commerce. They are catalysts for transformation. By bridging the gaps in Africa's diverse markets, we are not just facilitating transactions. We are building bridges between rural and urban, between informal and formal, between local and global. The time to act is now. As industry leaders, we hold the responsibility to innovate, to collaborate, and to lead with purpose. Let us harness the power of payments and innovation to create an Africa where opportunities are accessible, growth is inclusive, and businesses thrive across every corner of the continent. Together, let's not only imagine the future, we must build it. Thank you very much.
Thank you very much, distinguished guests, ladies and gentlemen. Let's put our hands together for Mr. Akeem Lawal, MD Payment Processing and Switching Pure Pay at Interswitch. Thank you, Mr. Lawal, for such a thought-provoking keynote. Your insights remind us of the limitless opportunities that fintech innovations bring to the table. I hope you're all having a great time. TechConnect 4.0 is in full session, and we have a lot in store for you today. Our first conversation of the day is a fireside chat on regulating new technology strategies for innovation and compliance. Moderating this engaging session is the Chief Innovation Officer at Interswitch, Adaobi Okere-Kiocha, and joining her two of the industry's finest minds. Mr. Akeem Lawal just spoke now, and we'll also have Tosin Eniolorun Da, the co-founder and group CEO at Moneypoint Inc. Please join me in giving them a warm round of applause. Thank you.
Good afternoon, ladies and gentlemen. Welcome to TechConnect 4.0. Are you excited to be here? Please, a round of applause for our speakers as they walk up the podium. So let me say what I guess is on everybody's mind. Congratulations to Tosin and Yolarunda and the Money Point team on joining the Hall of Unicorns. It's a win for us. It's a win for the industry. Well done. Okay, so we want to go straight into the conversation today. As Gwenga mentioned, we will be discussing regulating new technologies, strategies for innovation and compliance, harmonizing regulatory frameworks, and risk-based approaches. I mean, we all know that technology has seen unprecedented pace in the last decade, right? And we know that it has brought hyper-growth, innovation, transformation across multiple industries. And even here on the continent, I mean, we're a testament to that as well. But we also recognize that there are challenges and there are constraints. And so the conversation today is going to be, diving into that, leveraging the knowledge and the expertise of our speakers to figure out how do we navigate this landscape and the different nuances, especially around balancing innovation, with compliance. So I'm going to start with a question for Akeem. So, in your experience, what are the most effective strategies for startups to identify and collaborate with industry players to drive innovative solutions in Nigeria and across Africa?
Thanks, Ada. I was hoping you would ask Tosin the first question, but I think it's also good. Tosin, congratulations. Thank you. As well. Let me add my congratulations to that. What should fintechs or startups be looking at? And I think that question needs to start with understanding that there are many things that you cannot do alone, right? There are many things that you will not be great at, and you will never be efficient doing, right? There is infrastructure, rails, roads that have already been built that you can use to accelerate your business, right? That you may not need to reinvent as you innovate, right? So I think that's number one. Number two is then understanding where in the vast array of problems and opportunities do I want to play as a fintech or as a startup, and what unique capabilities can I bring to the table? And I think as you answer those two questions, the opportunity for who to partner with, how to partner with them, and what to do to bring value into that partnership becomes very clear, right? And then the rest is just finding like-minded organizations who are willing and able to deliver what you need, that will get value from what you have, and then co-create for the future. And it's a philosophy that we've always had as Interswitch. We've built our business primarily by enabling innovators, startups, fintechs, to build products and services that today have become multi-billion-dollar businesses, right? And I think that approach works, and it's the approach that I would strongly recommend.
All right, thank you very much, Akeem. I think the first part of your submission was spot on, because I can imagine most startups are looking to quickly bootstrap. So, leveraging what already exists to capture value is equally important. Tosin, do you have views on this from your own perspective? around how startups can identify and collaborate with industry players as well?
I think, I mean, like what you also said too, you can't, I mean, if you want to have a product that will work and the market will accept, you need a lot of services, and you can't possibly build all those services yourself. So it's inevitable to collaborate. There's simply no other way. From the basics like your infrastructure, your cloud service provider, your transaction service provider, AML provider, core banking provider, I think we can take it for granted that you just need to collaborate to start with. I think a trend, however, that we are all also aware of is typically when things like this happen, people start backward integrating. And backward integration is often pressurized by the need to drive efficiency, the need to reduce costs. Typically the two main pressures that you have usually to backward integrate. And this is a consideration that one should always generally have when one is building services, especially when one is a service provider, and also when you are also the service consumer. And I don't think that if people, I don't think like if any business owner sees no pressure, I don't think if you don't have any pressure to have those two things, efficiency and cost, I don't think you will want to put effort in doing that. I don't think it's worth it, because oftentimes those pieces of infrastructure are usually very difficult and benefit from network effects. And so I think hence the summary of my submission will be collaboration is inevitable starting out. You don't have any other choice to do it. And generally down the line, you start looking inward to improve cost, improve efficiency. This might want to force you to start thinking through alternative methods or owning those methods yourself. But usually this main service provider themselves has economies of scale. And the economies of scale that they have will typically allow them to potentially offer it cheaper, potentially also, have more services that they can lay on top of it that will create some level of stickiness. But I think my general admonition is we should all be aware that even in collaboration, pressures like this exist.
Yeah. Thank you so much, Tosin, for that submission. So, I mean, I like the fact that you said collaboration is inevitable. So, how has MoneyPoint leveraged partnerships such as, for instance, card issuance solutions from Interswitch to drive growth? Can you share a little bit, around that for us to
an example of what I said is oftentimes these things are hard. For example, if you want to issue card, you need a card management system.
Absolutely.
And I don't think maybe a few startups in Nigeria have built a solid enterprise grade card management system. So you definitely have to collaborate in a card management system, of which we know that the best in class in the industry is Postillion. And MoneyPoint uses Postillion to issue our cards. Thank
Somebody
you.
was doing a round of applause there, please.
So clearly that's collaboration. Two, of course, is VevCard,
Yes.
it being a domestic card scheme. A domestic card scheme that still allows us to pay in Naira, and is also quite so now well accepted, as well as very responsive team beyond it. I hope Vinny is here listening somewhere. Because we have unfinished business. But clearly that's VevCard. That's another major. Of course, then you also have the Switch. The classic Switch, which allows us to process our transactions. I will say here that, of course, that we also have our own infrastructure. But I will say that of all the service providers we use, aside our own, Interswitch is the most reliable.
Wow. A round of applause, please.
Yeah. Interswitch is the most reliable. Clearly, I mean, that allows, and things have improved a lot. Like in the very early days, things used to fail, but I barely hear that there's a downtime now. And even the downtimes that we have, I don't think they're particularly related to Interswitch. Mostly maybe bank-specific downtimes, or maybe some interchange on the bank side is down. So,
Wow.
so I think what else do we do together? I think these are three major points for us: cards, transaction processing. I think also that even as the industry is evolving, consolidating, thriving, the need to have reliability will always be key. Even if others build their rails, you always need to have a rail that you always need to use, especially because volume-based pricing will require you to maintain certain level kinds of volume, as long as you want that rail to exist. So, and I believe that these are known strategies that you can, use to continue to foster collaboration.
Thank you so much for that wonderful submission. I think it's a testament to how Interswitch is enabling innovators within this ecosystem. So we mean what we say, and we say what we mean. Thank you, Tosin. Akim, I'm going to direct this question to you next. As Interswitch, being a startup at some point, in our history as well, and from your experience coming, through 20 years, what guidance would you offer startups who are looking to collaborate with established players within this space, especially in this regulated market? What would be that guidance, that insight you would be giving to startups around collaborating with established players?
Yeah. Can we still call ourselves startup?
Well, we used to be. So I'd like to hear,
No. So, but just casting my mind back to when Interswitch itself started, right? What were the things that were really important for us, right? One really was finding, should I say, like-minded partners that will go on the journey with us, right? And many of those partners are in the room today. We started with banks who believed in what we're trying to do. We started with technology companies from outside of Nigeria who looked at this small Nigerian company and said, we will be willing to give you our technology for you to represent us in the market. We started with global card manufacturers, right, who, from where they were looking, Nigeria was a small, tiny market, but they believed in the stories that we're telling, and they said, okay, yes, we will deal with you, right? I'm casting my mind back and then positioning it in today, right? If I was a startup today, the thoughts in my mind will be being able to clearly communicate or articulate what it is that you're trying to do to the people that you're hoping will partner with you. What impact are you trying to make? What problem are you trying to solve? And you're communicating that to people in a manner that they believe it, they trust you, and they want to co-create that with you. And I think that's probably number one. But what is different is that the market has matured, right? Beyond where we were in those days. I remember we had gone to the central bank to say we need a license for switching, and there was no license for switching. So there was no guidelines for electronic payments at the time. And we had to work with the central bank to carve the first e-banking guidelines that came out about a year, 2 years after we had started operations, right? Today it's a little bit different. There are very clear guidelines. There are very clear regulatory requirements. And I think startups really need to understand what the guidelines are. They need to understand what the rules are, right? A lot of startups get into trouble by trying to do things that the guidelines clearly prohibit. Now, many will tell you, oh, it's stifling innovation. But the truth is, the regulators have made it possible for you to bring those ideas forward. This particular regulatory environment is one that is adaptable and amenable to changing things with the right argument, with the right drive. So you as a fintech startup, you need to think about what are the regulations, what are you going to do that will not be in the regulation, and find a way to engage early, even if it's just to go and explain to somebody in the central bank that this is what I'm trying to do and there's no regulation for it. You will get guidance, and that's been my experience to those who have asked to go on that journey. And I think for me, those 2, 3 things will probably be the most important thing to start up. Maybe ask to add.
Yeah. I mean, similar experience. Thankfully, the current regulation is a lot more amenable to regulators that are a lot more, listening. And another lesson that MoneyPoint has learned is a lot of times sometimes innovation and regulation, yes, they fight a lot of times, but sometimes they don't, you can find a way. And that third thing in that triangle is product. There's a way a very good product can enable everybody to win. Sales will be happy, and a regulation will be happy. An example of that is KYC, for example. KYC is something that sales doesn't like because it creates friction for customers. But KYC exists for a reason. And that reason is not because, as we have learned very well now, that it's not just because the regulators want to make life hard for you. It exists to protect the industry from people that just want to take advantage of the industry. And but salespeople don't like it because it creates friction. That's where the product guys can come in. Product guys can build in a product that works very, very well, that makes salespeople happy, while still being very responsive to regulation. And if you go to much more advanced economies like in the UK, you find very well-respected apps that have very high NPS, that are, however, still very compliant with stringent regulatory rules. And this usually requires far deeper execution. If you say you want to be able to upgrade an account from KYC level 2 to 3 and give yourself a high target of, say, 24 hours, if you don't do that properly, you know that you become a target for fraudsters. But if you build an infrastructure that is deeply on the ground and does what needs to be done, verifies address, such that it truly, truly physically verifies those addresses, and you can still meet your 24 hours, you make both sales and regulation happy. But the ability to do that is not trivial. And I think it is, however, a challenge for our product guys and our business guys to think that there's an alternative sometimes when regulation puts their foot ground on something and sales wants to be, growth or sales wants to also drive it out also. Then I also think that there's one more thing that fintech industry didn't do very well that we should be doing better now, and it is self-regulation. If banks do that, banks report themselves and they probably call each other. I feel like the fintech industry focused a lot on growth and also did not look at each other and self-regulate. We should have been able to call ourselves and say, listen, let's not do this. We know we're all driving towards growth, but you see this, it's a boundary. We should not cross this boundary. Or we should all go together and go and engage the regulator and say we should do this. And I don't know why it happened then, maybe because a good portion of the fintech guys are not Nigerian, a portion of them are not Nigerian, and maybe building such relationships with them wasn't as good as if you'd call, or maybe because fintech grew during remote days when COVID was around and physical meetings which will enable such trust conversations were hard to come by. In any case, that's something that the fintech industry needs to bring back. Self-regulation, talking to each other, fixing issues even before it becomes a big problem with the industry.
Wow, thank you so much, Tosin.
Can I challenge you that maybe we should drive and lead this revival? Because you're absolutely right. Yeah. I think a lot of what the regulators are asking us to do, and I've been in some of those meetings, and I know you've been as well, where the regulator wants to solve a problem, they are prescribing a solution that we know will not really solve the problem, but create all kinds of problems. But we who are in the industry, we know, if once we understand the problem that you're trying to solve, we can solve that problem in a way that helps the business, helps the industry, and addresses their problem. Can I maybe use this opportunity just to challenge ourselves? And I know many of our partners are here as well. Can we lead this charge, I think?
Money Point and, Money Point Group, we are totally in. I would say, that we've been informally also engaging each other on this, and I can publicly commit to that we are in for self-regulation. The good thing with self-regulation is that we will handle our business interests in it. We'll be able to balance it, and you present a solution that truly works. For example, now, we are currently working with some of our colleagues to come up with some form of framework for agency banking that can solve agency banking challenges on fraud and AML. We think it's strongly related to the limits that agents can do, because it will be really hard, in my own opinion, to stop some of these roaming guys around and non-kiosk. We can do it. It's not like you can't do it, but it's like fighting the wrong battle, because there are probably 2 million agents in Nigeria, and this is one of the biggest employers of labor. People are doing this simply out of no other alternative. And if you really want to stop people's sense of livelihood, it will create a black market. So we think that what should happen is an acknowledgement of that. However, a tiered approach to limits that is regardless of if you have full KYC on KYC level 3 or business accounts, that is based on the risk that agent is on. Why should a business, not even just an agent, why should a business have a 50 million naira limit? There should be a reason why you're giving such a person a limit. But these guys that are on the streets can have a 1 million naira limit. What this does is it prevents money laundering. Because at the end of the day, limits and KYC is one of the biggest preventers of money laundering. But something like this, Money Point cannot do alone. We have to do it in collaboration with everybody in the industry, and everybody agrees that. And if everybody also has an alternative view of what we can do to actually truly solve it, especially people that are true operators that operate it and know what it is to be able to do it, we are open to that. But we need to all come together and solve these problems that affect the industry. Lines between cash out and purchase are blurred. Like you have merchants that are doing cash out, it's really, really blurred now. And we need to take a much more holistic view in tackling some of the frauds that are happening in the industry.
Thank you so much. I'm really appreciating these conversations. Good things are coming out of TechConnect. Wow. We're happy to take this conversation forward, after this event. Thank you, Hakeem. Thank you, Tosin. I think one of the things I picked when you were talking is, how business and product guys need to also, innovate within that constraint. That innovation is born out of that constraint, and it causes you to start to look at interesting other ways to solve that problem. So now that we're on the topic of innovation, I just wanted to ask you, Hakeem, quickly. Interswitch has played a significant role for sure, helping fintechs and financial institutions scale. Can you share how this has been achieved? What's the Interswitch, view on how we're helping?
Yeah, so there is, I made, during my keynote, I made a comment, right? And it's something I say all the time. Innovation for us, either as Nigerians or Africans, is not a strategy. It's an imperative, right? The problems that we need to solve are unique to us, and the solutions to them are unique. I've been in conferences abroad, I don't want to mention countries, where I'm talking about the kind of problems that we're facing, and people are looking at you and wondering, what are you talking about, right? How is that a problem? They don't get it, and they cannot understand it. And I say that to say that we recognize and understand that how to grow this industry is true innovation. We also understand that no one can do it alone. Right? So our approach has always been, Interswitch will innovate. right? It is our DNA, it is what we must do. But we must also enable other innovators, right? We must support innovations that are coming outside of Interswitch. We must support those innovators who are solving problems that maybe we're not even looking at, or we're not even positioned properly to solve, right? And I think that's the DNA of how we play and how we must play, right? And that's the journey.
So we innovate and we help others innovate. So while we're on that topic, I know you talked about it a little bit during your keynote speech, but for the benefit of those who may have just walked in, I'd like to ask this question. So how can strategic partnerships, such as those facilitated by Interswitch, contribute to bridging the digital payment infrastructure gap across Africa?
Okay. It's one of my favorite topics. And I want to hear Tosin's answer as well, because I think we're on the same journey. I think part of what drives me personally, right, is trying to understand why is it that when I want to send money from Nigeria to Ghana, I first have to go and look for dollars to buy. We don't spend dollars in Nigeria, we don't spend it in Ghana. Why is it that when I then do that transaction, it first has to go to New York or St. Louis or San Francisco, right? I don't understand it. Well, I understand it, but it doesn't make sense. Why is it that when we then want to do those transactions, the banks that are involved are not even African banks? Right? You need a bank that is sitting somewhere outside to be your correspondence banks, right? Which means that if I'm producing goods in Nigeria and I want to sell to somebody in Ghana, I can't do it. I'm trying to do trade across the border, I can't do it, right? And because of that, I think what the data shows is that intra-Africa trade and payments is less than 20% of total trade. We are forced to trade outside of Africa. And we are forced to trade on unfavorable terms, right? And the reason why that problem looks like it's difficult to solve is because there are 54 countries, over 2,000 languages, I don't know, I think 40 or 44 currencies, different regulatory regimes across all of those countries, that we need to figure out a way to navigate. There are many companies, including Interswitch, that have been trying to solve that problem for years and years and years and years, right? And I would say that everyone has had a different level of success. I think it's time, right, that we take a collaborative approach to solving that problem. I think it's time that we create an ecosystem of players who brings value to the table that says we will address this problem in a way where if I take my card and I go to Kenya, that transaction will be settled between Naira and Kenya shillings. It will be settled in a Nigerian bank, right? And it will be settled the same day, right? It is possible. We just need all of the parties in that ecosystem to work together. And I think that really is the opportunity that collaboration and partnership can potentially solve.
Tosin, your views?
Yeah, I think I strongly agree with what Akim is saying. I could go back slightly and just think of what innovation is. Innovation is, I mean, you know, we hear this Eureka moment, like, you know, where, I don't know if you know the story of where they said, was it Archimedes that was in a bathtub and, okay, I think he was given the problem that the king told him that he wanted to test if his crown is made out of pure gold. And they gave that challenge to Archimedes. And Archimedes was thinking through how we solve it. And he was in a bathtub and he shouted Eureka and he jumped out, saying that he has solved it. And I think quite a bit of us, you know, think that innovation is about that Eureka moment. Or we know the story of Newton, that apple dropped on his head and you know that story. But in reality, that's not where the innovation happens. Innovation happens in the process before all that. That moment is just like like when everything comes together. So innovation really is not something that you could. It's something that takes a process, and typically some factors need to come in. The factors first is there's a problem to be solved that you are sufficiently motivated enough to do, and you have somebody or at least a group of people who are constantly thinking and thinking and thinking and thinking and thinking and thinking about it. So that part of thinking happens, but an important part of it is the subconscious mind that percolates all those thoughts at the back of your mind, and you now finally have a solution that works, and hence you jump out of the bathtub and say, Eureka. And where am I going to this? I'm essentially saying that if we know that is how innovation truly happens, then one of the means of how we can ensure that we get our goals at the end of the day typically will be partnerships. And the reason is because all the resources that you need to be able to solve the problem and aka innovate will usually not be in your hands. You always need to rely on other people to be able to get it done. So, and being the knowledge and the capability that all these partners already have needs to, however, be in your mind, at the back of your mind, when you're thinking and you're mulling over this problem, because that's when your subconscious mind will be able to percolate everything together and you can say, Eureka. So I'm challenging everybody, I'm challenging all leaders that when we're thinking of innovation, we should not think of it generally as something that happens in the moment, but almost think of it as something that is cultural. Almost think of it as is something that is set up in your system, and and it naturally happens when you give people hard problems and give them time, and they think about it while they're in the shower, and ideas come to their heads. I know we've all felt this moment, we all have it, and those are micro moments of innovation. But for you to do that, you need to have knowledge, and knowledge of capabilities of partnership is an important part. Thanks.
Thank you, Tosin. I like that view around experimentation, because a lot of times we miss out on that part, that leads to the actual innovation that happens. I have a question for you, Tosin. And we were talking earlier about regulation, right? How sometimes innovation could be ahead of it, or regulation could constrain it, and sometimes they actually may be in sync. So my question would be, how can harmonized regulatory frameworks drive innovation and enhance the growth of digital ecosystems across Africa? And then maybe we'll get Akim's views as well, but I'd like to hear yours first.
I mean, I know I mentioned earlier that sales and products, sales and regulation, maybe products can help bridge the gap. But there are certain regulatory rules that you can't out-innovate. If regulation simply says no more banking, or how do you out-innovate that? I mean, maybe there is, there is. Never say never. But absolutely harmonized, consistent rules of engagement and how things should be done absolutely enhances innovation. We all know Fintech grew and blew up many years back under regulatory postures that supported them. And these regulatory postures brought in tiered KYC levels. These regulatory postures brought in new fintech license, simplified fintech licenses, created sandboxes, and basically attempted to just harmonize everything just to drive financial inclusion. And we can see the results today. Volumes of financial transactions, payment transactions have exploded. There are clear winners. I'm hoping everybody is going to continue winning, and more people will win in it. But that's an example of how a harmonized regulatory posture can enhance regulation. Because regulation, the very name it states, is like stop or control. That's what it is. And if you have clear rules of engagement that are not overly restrictive, because I've been to countries also where it's generally hard to innovate because the regulatory posture there is no until I say yes. It's almost like it's a blacklist, it's a whitelist approach. Whereas Nigeria feels more like a blacklist approach. And I think that we should be thankful for the regulation that we have here, even despite all the issues. I think if you go to some other countries, it's more like everything is a no until this specific one that I say you should do yes. And clearly, the countries also usually suffer for such. So I think with those few examples, it's clear that a permissible regulatory environment that has the right posture, that's a blacklist approach, which means most things are permitted except the things that are specifically prohibited, and in these guidelines that I've said you should do it. That approach and harmonizing all the regulation together will certainly foster collaboration as we've seen in the last couple of years.
Thank you, Tosin.
Yeah, I think, and I completely agree with Tosin. I think maybe just an additional perspective, especially when it comes to new innovation and Africa. One of the big challenges that we must find a way to solve is how do we harmonize the regulatory environment across the continent? And it's really difficult to do because governments are different, regulators are different. But I do believe that there is a framework that regulators can rely on. Countries have signed on to the Africa Continental Free Trade Agreement. Within that agreement, there are certain goals, objectives that have been defined that could potentially form the basis of harmonizing at least regulation around cross-border trade and payments, right? And if I was to wave a magic wand and wish for something that our African regulators could do, it will be to use that framework, maybe with the support of the Secretariat, the AFTA Secretariat, to begin to find common ground around regulatory practices that will allow cross-border payments to enable cross-border trade, right? And I think that's number one. Number two is there is innovation for which there is no current regulation, right? And in Nigeria, at least we have a regulator that, like Tosin said, is more of a, you can do this, you can do this, you can't do this, but everything else, try and let us see. That try and let us see can either be in the form of come and do stuff in our regulatory sandbox. It could also be come and explain what you are doing. Let's give you a no objection until we see what it is that you're doing. If that continues, I think a lot more of the innovation that we've seen in the last 4 or 5 years will continue. And I believe that that will transform the payments system, maybe even unrecognizably, in the next 2, 3, 4, 5 years. Technologies like AI will come in, technologies like blockchain will come in, and similar things, some of which we admit not have even thought about, will then help us solve those problems that are remaining that we still need to figure out.
Thank you, Akim. A round of applause, please. Okay, so I think I have one more question on the regulatory side, and Tosin, I'd like to hear from you. Again, I know that there are startups and there are fintechs here as well, so I think my question to you would be, how has MoneyPoint balanced that fine line between innovation and regulatory compliance, while having the need to still scale your tech-driven solutions?
Like I said earlier, as we began to mature more, I've seen it as a required, and I now appreciate where regulation comes from sometimes. And it's simply the product. So essentially, I'm seeing it as a continuum. You don't have a correct product or a good product with a good product market fit if customers and regulation don't like it. It's simple. It's not like it's one against the other. The product is not complete if both are not complete. And when you really think hard about it, it forces you to innovate in a way that you keep growth, aka innovation, happy, and regulators happy. That is the way mindset that we have adopted internally now. And I know that there are times also that when your competition is not following those same rules and they get arbitrage from it and they want to move faster, and I think that's where self-regulation should come in, because that is what makes a lot of us abandon those things. You hear things like, but these guys are doing it. And these guys are doing it, at least everybody in the industry is doing it. And regulators will wake up in maybe a few weeks' time now and stop all of us and we'll get into trouble. So I feel like what we should do as an industry is simply acknowledge that product, aka growth, aka innovation, needs to bring in regulation. It's one single continuum. They are not one against the others. And we make sure that everybody in the industry self-regulates. And with that, I think all of us should join one WhatsApp group that we don't post nonsense into. Join one WhatsApp group and be reporting ourselves there. If Money Point is doing something that is wrong, someone from post it there that, okay, your people are doing this. My CCO will not stay in that place, or the CEO will do that, and they will keep quiet. If we take that approach, nobody will keep quiet, and it will just simply create a sanity in the environment. And let's innovate within the constraints of the regulation. If we all, however, think that regulation doesn't make sense, we understand what regulation wants to do, it doesn't make sense. In fact, regulators will listen to all of us more when we go together as a group and go and meet them, because they know that approach. And maybe Akim should create this WhatsApp group. Put the CCOs, put the CCOs and put the CEOs in those groups, and let's start reporting ourselves in those groups.
Bringing out his phone. Okay, very interesting session. I'm sure it was also interesting for you. I just want to go around one more time and ask for you, Akim, for you, Tosi, maybe starting with Akim. So what's your long-term vision for financial inclusion in Africa? How will Interswitch shape that future?
It's a big vision, but I'll pick one. For me, it's cross-border payments. I want to see a day where, growing up, my mom used to manufacture eggs, right? Or breed chickens and raise eggs. And I know how many times we lost almost half of what we produced simply because there was no way to sell it, right? Technology has helped to solve that largely in Nigeria. But I'm looking for the day where somebody who is in a village, in some community in Africa, is able to produce goods and services that can be sold in another country in Africa, and they can get value for that in their own currency in the same day. And I think that vision can be achievable if we collaborate.
Thank you, Akim. Tosi, final thoughts?
Yeah, I mean, I also agree that cross-border is a major place to go, and Money Point is also thinking about that seriously also. And I also think, in addition, that it's a matter of, opportunity, that financial inclusion is also where the market is. I think that for the cream of the market, aka big corporates, aka HNIs, have excellent services already being given by, the banks. And where the opportunity are the businesses and the customers that are generally much more harder or much more expensive to serve. So I think it's a matter of business opportunity and not just charity that financial inclusion is happening. And I think also the people that sponsor financial inclusion love financial inclusion to be sustainable. So it's a win-win-win for everybody. It's a win for the regulator, it's a win for the business, and it's a win for the development finance providers. And also being able to have unrestricted trade across African countries makes sense. And I totally agree that why should Naira be routed to New York before it gets to Accra, and vice versa. And I think that there's now the need for a Pan-African, and I think some of the banks are already playing there, but maybe it also needs to be extended in a way that it's much more available to customers. For there to be a Pan-African payment platform that allows money to be able to move seamlessly across African countries, and not necessarily directed only to big corporates and individuals who have relationship managers that they can call on the phone. But a simple, easy to use digital first application that can permit the movement of such flows. Of course, we know that there are capital control concerns, especially in a country like Nigeria, where there are supposed to be documentary trail that I would say sometimes does not mimic. It's a harder path to follow for most businesses, because most people can simply have a guy that they call today. And why will I do that through a digital means if the digital means it will create more friction? But I think that a much more organized fintech environment that solves the problem for regulators and solves it in a way that also works for the business, which is what I said, essentially regulation and sales. There's a product innovation angle for it, can however solve that. However, that remains to be so that the opportunity still remains that cross-border payments for not necessarily the big corporates, but everybody else under the bottoms of the pyramid is the way to go. And financial inclusion today is something that is happening naturally because it's also where the opportunity is, and it's good for all the parties that are involved. Thanks.
Thank you so much. A round of applause for our speakers. This brings us to the end of this session. We've run out of time, but we have a slot for just 2 questions, right? So, by show of hands, we can take just 2 questions, please. If there's any in the room. I see a hand somewhere. Okay, please. If we could pass the microphone.
Hi everyone, good afternoon.
Good afternoon.
My name is Yomi Bileomo. I work growth and partnership for AfriChain Technologies. My question really is around remittance, right? I hear you talk about like having remittance Pan-African wise, right? But there's already like a Pan-African system for that the central banks are building. It's called PAPS, right? My question really is like, how do you see this regulatory frameworks across central banks? How do you see them like forming like a symbiotic system that will accommodate the smaller players in the system, right? Because like PAPS really is like, it seems like it's more or less like the central banks that are doing it with partners. I can see that Interswitch is also a partner as well. But my question really is like, how would that create rooms for the smaller players in the business, and how would we be able to like cope with such regulatory frameworks?
Kim, you'll take that one.
All right, thank you. So you're right, Interswitch signed up as a technology connectivity partner for PAPS. And the reason was because we wanted to take away some of the complexity for integrating into the PAPS system for fintechs who are our customers. I think the challenge that we've had on PAPS is the reason why we believe that there's still a better way, right? And hopefully, as we go on this journey of looking for a collaborative solution, we will find it, and we will address all of those challenges that, for whatever reason, we still haven't been able to solve with PAPs. And the solution will be one, I mean, to answer your question directly, will be one that will be API first, digital first, and accessible not just to the big players, but also the fintech players as well. But it will be a platform that will also address the concerns of regulation, the concerns of risk, fraud management, and terrorist financing and AML. So even if you're a fintech, you will need to abide by those rules. Yeah.
All right, thank you, Akeem. One last question. If not, we move. Okay, I think that brings us to the end of this session. A round of applause for our speakers once again. It was an absolute pleasure to host this session. Enjoy the rest of the event. Thank you.
Distinguished guests, ladies and gentlemen, please let's put our hands together for Ada Tosi and Akeem for such illuminating discussion. It's TechConnect 4.0, and I'm sure we're learning a lot. Please let's put our hands together for the organizers, Interswitch, because the quality of the discussion we're having here is top-notch, and it's absolutely free. I'm sure if you had to pay a fee to listen to the distinguished panelists, you'd be paying top dollar. So it's very great of them to do this for free. Swiftly moving on. Next, we have our panel discussion. Our first panel discussion, we'll be talking about the theme, Navigating the Future of Financial Services, Integrating Compliance, Technology, and Collaboration to combat fraud and drive growth. Moderating this session will be the head of digital banking at Interswitch, who happens to be my distinguished co-MC today, Tina Olare. Please put your hands together for her.
Thank you. Thank you very much, Benga. All right. As Benga said, we'll be having our panel session. And we're looking at the topic, Navigating the Future of Financial Services. I'll just quickly call up my panelists. I've seen a few of them around. Join me on stage, please. Choila Aga. Choila is our VP Financial Services at Interswitch. Put your hands together as he takes up the stage. Thank you. These hands can do better. Thank you, thank you, thank you. While Toila comes up, also joining me on stage is Oluwa Bankole Falade. He is the Chief Regulatory and Risk Policy Officer at Flutterwave. Please put your hands together for him. We can do better. Let's put our hands together as they take up the stage, please. Thank you. Also joining me on stage is Zachariah Akinpelu. Zachariah is Chief Information and Security Officer at Unity Bank. Please put your hands together for him as Zachariah comes up. Keep putting your hands together until they get to the stage. Thank you. That's how we do it. Oluwa Bankole, yes, you're coming up. Thank you from Flutterwave. Also joining us is Oladipupo Aino. Oladipupo is VP Technology at Kuda. Please put your hands together. We can see the people which is bringing together. Put your hands together, please. This will be very interesting. Last but not the least, joining me is our EVP Risk and Information Security at Interswitch in the person of Griffiths Eherba. Please put your hands together. I think my panel is coming up. Yes. I have everybody coming up. Continue to put your hands together until they get on stage. Thank you. Griffith is coming up. Continue clapping. No, Griffith is coming up. We will not stop until everybody is seated. Thank you, thank you, thank you, thank you. Yes. And blessed am I amongst men. Clap for me, Tina Olaore. My wonderful panel. Have your seat, Griffith. Thank you. All right. Thank you so much to my panelists. Thank you for honoring this invitation. I mean, it's a pleasure having you here at the Interswitch TechConnect 4.0 event. And I know that everyone here is going to do justice to this panel session based on your experience, I mean, in the financial services landscape. Let's quickly look at our topic for today again, right? Our topic is navigating the future of financial services. Specifically, we're focusing on integrating compliance, technology, and, of course, collaboration to combat fraud and drive growth. And I must say that as we navigate the rapidly evolving financial services sector, okay, one truth remains clear. And that truth is that the intersection of compliance, technology, and collaboration is no longer a choice. It is a necessity. It's something that we have to do. Today, we are faced with challenges in combating fraud, ensuring regulatory compliance, and in the midst of this, driving sustainable growth. Okay, but then there is a bright side to it. These challenges also brings opportunities for innovation, and that's what we'll be talking about today in this panel session. And I'll be starting with you, Griffith. I called you up last, but he'll be the first to take my questions. Do you have your microphones there? Okay, thank you. And Griffith, I'm asking you this question first, based on your experience. You've been in the space of managing risk and control, information security risk, to be specific, for quite a number of time now. From your own experience and in your view, how would you say technological advancements have changed the way fraud is conducted, first off, and then detected? Now, let me put a background to it. Growing up, right, the fraud we used to know will be 419. Somebody scammed this, But today, fraud could be that I'm on a video call with somebody, and it is not that person. That's the level of sophistication we have gotten to in terms of fraud. So, but how would you say that technological advancements have changed the way frauds used to be over the years, how frauds was conducted, and how it is being detected today? I think it's on.
Okay. Thank you very much. I'm glad you broke the question into two. The first one is, how has fraud changed over time? The last panel talked a lot about how to improve our innovative landscape and how to manage. You see, Akim said Africans had no choice, but we just innovate. So while inflation came about, while there were needs to be fulfilled, households expanded, hardship became rife. It was also necessary for the bad guys to also find a way to expand and scale. So while technology was scaling, while it was enhancing our payments, the bad guys also found a way to scale the normal we call it frauds and forgeries in the days, where you try to steal somebody's signature and try to paint it and go to the bank and try to harvest some money. Or very simple frauds, by the way. At that time, it was also very complex. But what we see today is the kind of sophisticated schemes. When Akim was talking about collaboration between the fintechs, regulation, and the rest, the fraudsters also now collaborate greatly. So whatever we are promoting in the daytime, if I call the fraud world the nighttime, it's also being promoted. So we've seen that development, that sophistication, movement away from the manual to technology to speed and scale. From doing it faster, we've also seen frauds be perpetrated faster. And the magnitude is becoming bigger and higher. And so if you look at what we're now seeing in technology side, on the preventive side, we would use CCTV and right to the branch hall. This environment is monitored by CCTV developed by cyber dogs, just to scare you away. They are no more scared about that because they don't want to come to your banking hall. So the more the products became flexible and became easy to use, it also opened up opportunities for ease to defraud and ease to also manipulate. But today, glad to announce that technology is also improving on the ways these are detected. I guess that's the second question. We've seen, she just mentioned something, give an example, what we call deep fakes, where your face, your voice is faked, either in videos, in SMSs, and the rest of them, to manipulate unsuspecting either customers or clients. Today, we have tools that can now detect those things. Where, for instance, if you want to detect the deep fake, very simple thing, a live example, give me the fact that you're alive, the gesticulation, the voice prompt, the movement between the voice and the lips and the facial expression can now be detected with technology. We've seen what we call the blue and red teaming in cybersecurity. We also now have generative adversarial AIs and networks. Another solution that could mimic the bad guys versus the good transaction, if I use those very lay-level language, where you could see, you can now proactively detect fraudulent transactions. We've seen active real-time fraud detection, transaction monitoring, where we can now detect bad patterns that are not regular and that can then be suspected as fraudulent. Recently, technology has also started on the credit side of the banks, where you have the credit bureau, where you can detect people that are perpetually bad debtors. We are also getting to the point where we have watch lists, where you have people that are perpetually bad actors making fraudulent transactions. At that point, collaboration will be invited into the room where technological advancements and flexibility for innovations and products are having a discussion. So for me, the growth, we thought it would be progressive, but it's exponential between what technology is doing and what the bad guys are doing in the fraud world. So we have a lot of tools, we have solutions, we have advancements in methodologies for detecting frauds and cyber threats.
Very well said, Griffith. Thank you very much. And like you said, while we the good guys are working during the day, the bad guys are working at night, or maybe round the clock. I mean, maybe round the clock, right? And that leads us to the second question, and I'll be directing it to Zachariah, and then I'd like to hear your views as well. Oladipupo, and I know as well. So my next question to you, Zachariah, as CISO, right, what are those measures that financial institutions need to take to curb the rise in fraud cases amidst this increased digital payments adoption? You know, Griffith talked about while we are innovating, there's an increased pace of innovation daily, right? We are rolling out new technologies. So what can the financial institutions do? And I want to hear your point of view as CISO in a commercial bank, right? What are those measures that you would take to curb the rise of fraud cases?
All right, thank you very much. I like the way you wrap up the Griffith discussion. Now, why we work during the day the bad guys work around the clock. So that's the actual what is happening. And as as we have a technological advancements, as payment advances, so those bad guys who are also leveraging on technology for them to carry out their advisory attacks. So bad guys today leverage on AI to conduct a more sophisticated phishing attack. Gone are those days that information security awareness, you'll be asking people, these are the things that you need to watch out for. Check for the mail header, check for the pattern, check for grammatical error. So to me, I think is a fraudster that is not so sophisticated that will be doing those kind of it. Today, phishing, the bad guys leverage on AI. They will craft a phishing that looks exactly like that originates from the organization. No? If you phishing email, and they also leverage on AI to conduct a sophisticated distributed denial of service. Gone are those days that you use some traditional tools to just create some fictitious packets. But today, with AI, you can create more sophisticated. And the world is so advanced that if they leverage on APT, advanced persistent threats, it takes, you can't use the traditional tools. You can't use the traditional firewall. You can't use the traditional, even what we call the next generation firewall, to counter those kind of attack. So in banking system, what we are doing, actually in my banks, so immediately I came about this. So I look at yes, we have some basic traditional tools, firewalling, and all of that. I decided to look at the quick win for me. Maybe the first 100 days, what are the things that need to be gotten, the tools. But luckily for me, before I was able to come up with a strategy, and I just picked like 2 of those major tooling, and I ensured that I replaced those tooling with an AI-enabled tooling. So part of what we do, like, you can leverage on, instead of you to be using the traditional SIM, you can leverage on AI. You can leverage on AI-powered SIM that will eliminate the work of SOC1 analysts. As you all are aware, the challenges that we are facing in this part of the world, especially in Nigeria, as you are training up talent, maybe before they will be fully trained up, they are already leaving. So you can leverage on the AI-powered, maybe to use to do the work of a SOC1 analyst. Also, Griffiths also made mention of leveraging on adversary, leveraging on tool for adversary simulation. You can simulate what a typical bad guys would do, and beyond what we are doing, like leveraging on the mention of the security operating center. So then another thing that you can also look at your detection. How do you manage your detection? How do you manage your response? Detection engineering. So detection engineering need to be top notch. You can't be leveraging on the traditional, maybe anti-malware. You can't be leveraging on the traditional anti-malware like all those antivirus and all of that. So it's high time that you start looking at, okay, AI-powered detection system like EDR, like managed detection response, and you need to leverage on AI to combat, because if the bad guys are leveraging on, because these fraud are so sophisticated that, yes, based on regulation, because banks are heavily regulated, most banks have been mandated to have a fraud monitoring solution. And yet, the same pattern of what happens in Bank A, you realize that something happened in Bank A, before you say jacobisin, the same pattern happen in Bank B. So that means that those bad guys, they collaborate a lot. They collaborate much more than us. So if you leverage on and the funniest part of it, despite that we have the fraud monitoring solution, I've seen a case whereby you define a rule with your fraud monitor, okay, single man being, nobody should be able to do like 100, maybe 100 transactions within a minute. You've configured that rules within your stuff, and over a period of time, you see some funny pattern. Maybe somebody want to conduct, they will have studied your system. That, okay, maybe there's a rule that, okay, somebody cannot just consummate a transaction within a minute. They would go beyond, they will tweak the stuff. So what that means that configuring rules is not sufficient. You need to leverage on artificial intelligence, because there's a pattern, and there's a terms in artificial intelligence that what we call the user entity behavior analytics. You need to look at you need to leverage on analytics. It's more like an analytics, how to analyze, okay, if you see some pattern, maybe you see like thousands of transactions within the seconds, your system should know that, okay, human being cannot conduct a single
Customer behavior
Yeah.
has changed.
So something
point.
has changed about this customer behavior. You need to look at the behavior of the customers, and you need to also leverage on engine or technology that can be used to combat that kind of stuff, not human being alone.
Thank you very much, Zakaria. Thank you so much for that response. I would like to hear your views, Oladipupo, from looking at it from the fintech space, right? What are your views? What should financial institutions begin to do to be able to curb this rise in fraud cases? And this should not be narrowed ternally, so I'd really like us to talk about that as well.
Yeah, thanks. I think the first thing for me, looking at, especially for my background as a technology person, is to go back to ground zero, where the solution is being built, right? You want to build solutions that has factored learnings over time. So you want to, for example, build solution that does not enable known fraud behavior. You want to maybe add a bit of control when people are transacting, maybe liveness check, for example, a couple of other things. And while doing that, you know, it's like a production factory, and you mentioned we should take into cognizance internal fraud as well, collusion and the likes. You want to adhere to known standards. So ISO 27001, where there's maker checker and some known rules and specifications for how to create stuff. You just want to, you want to put those controls in place so that no one has the full fiat, for example, to initiate a transaction on a customer's account, there's no maker checker, and then
monopoly of the system.
Money right? Goes out of the system as well. And then I think you mentioned briefly about collaboration as well. Doing fraud as an individual entity might be sufficient for that organization, but doing fraud as a collective has a much more bigger advantage and impact, because it's like you say, it's sophisticated, there's increased learning, there's adaptation from the fraudsters. The response for the industry should be similar. We should be learning of each other's experience. So how fraud happened at our organization, in other participating institutions likewise, and also in operations as well, operationalizing that level of collaboration. So immediately fraud start happening somewhere, you want to be able to respond collectively as an industry so that eventually, if nothing at all, you're able to prevent the complete loss of funds.
And that's why I'm involved across institutions and systems. Today, Dad, till today, we're still trying to convince him to get a card, right? Get a debit card. He would rather walk into the banking hall, say hi to everybody, and perform his transactions, right? And that is because of some form of trust that people do not have in the system. So, Bankole, my question to you is, why is collaboration between financial institutions and regulators crucial for fraud prevention?
Thank you very much for inviting me. Congratulations to Interswitch, and it's a pleasure to be here.
Thank you.
I think in payments, we're all in business of public trust, really. So collaboration is extremely important. When players collaborate, financial institutions, fintechs, banks collaborate, we build trust. When regulators collaborate, we also build trust. If there's really no trust in the financial system, we won't have a financial ecosystem. So I think trust in the financial system, we wouldn't have a financial ecosystem. So I think that's one of the major reasons why, collaboration is extremely important. Collaboration also helps with information sharing. You mentioned the fact that, fraudsters transcend borders, move across different institutions. When we collaborate, when we share information, we're able to learn, prevent those sorts of situations from happening. I think also collaboration also helps to build standards. The Fireside chat, they talked about industry self-regulation, the need for us to do things together, give a couple of examples on how we can even drive and improve regulation. I think we can couple of platforms like the Nigeria Electronic Flood Forum, but I think there's a lot more, there are more opportunities, there are many more things we can do. Information sharing as well that can happen between the various players, which would really protect and create sanity in the payments ecosystem. Thank you.
I'm going to put you on the
platform, the Nigerian Electronic Fraud Forum. Many people don't know it, but it's combined. The secretariat is managed by the Central Bank of Nigeria. Banks, financial institutions are members. Law enforcement agencies are also members. So you have the police, you have the NFIU, you have the FCC. But I mean, it's not common knowledge because if you are not in that space.
So awareness as well.
Yes.
We need to do that awareness
Yes.
for
so
people.
7 over 10 in my own opinion. And there's a lot of room to do a lot more, even with existing forums.
Griffith, I see you're itching to say something to that. Go ahead.
I agree with him on the rating because we've been to other countries where we try to go to Africa, and regulators kind of just take a copy from another world and put it down on the innovators, and then there is a logjam. But right here in Nigeria, we have different fora like the one you just mentioned. I think the room for improvement is to bring it down to what the last before you spoke about, talking about starting from the root. When we dream of that idea, at the point of conception, we carry the regulators along. This is where the world is headed. The day we knew that there was what is called geofencing to perform CAV, what you call address verification, the regulators never knew about it, and they resisted it until we could see the roaming POSs committing frauds. So, but again, was it the fault of the regulators or those of us that are sitting here, technology firms? So I think what he's saying is, yes, 7 over 10 looks very, very lofty to score, but the remaining 3 over 10 could be the gap that is required to stay alive. And we must continue to involve regulation as we innovate, involve regulations as we import technology, as we develop same, and then so we can move at the same pace, and we then have frameworks that works for all.
Thank you very much. Thank you. So 7 over 10, we agree, is pass mark, 70%. Thank you very much. I'll move to you, Taylor, and I'm particularly excited about this question, right? And this is why, because I'm going to be asking you a question around adopting new technologies while staying compliant. I'm directing this to you because I know that at Interswitch, you were very pivotal to one of the new technologies we just acquired, especially as regards our strategic partnership with ACI, the strategic partnership between Interswitch and ACI that happened not long ago, where we acquired 6 new technologies operational in 32 countries, right? That's the business you're known for. That's what you've been doing for us at Interswitch. So my question directly will be, how can financial institutions adopt new technologies while still staying compliant in an evolving regulatory landscape?
Thank you very much, Tina, and good afternoon, everyone. Good afternoon, everybody. Thank you so much for responding. I think I'll maybe start by sharing my thoughts on the conversation that we've had, and then I would answer the question around compliance versus new technologies, which speaks really to the intersection between technology and compliance. I think Akeem and Tosin thankfully have helped me, talk about it. So I'll just drop, my thoughts around it. Interestingly, we're having this fraud conversation in the week of the International Fraud Awareness Week. So I think, that's really insightful. And that week brings awareness, to the problem of fraud in our world today. I'm sure everyone in this room would agree that fraud is an existential threat. Do you all agree? That fraud is actually a big problem in our industry today. I was looking at a report recently, and I just took note on, some of the points in the report. And it's the FITC report on fraud and forgeries in the Nigerian banking industry. For Q2, the report states that the total amount lost was 42.6 billion, not million, 42.6 with a capital B, right? Versus less than 500 million lost in Q1. So it brings to the fore the problem of fraud in our industry today. And we know that every transaction that goes through our ecosystem is indeed a battleground where fraud threats continually emerge, adopt, and evolve. And everyone on the panel today has spoken about the importance of ensuring that we create the right synergy and collaboration. I think Tosin spoke about self-regulation, where we recognize that we're in this together to solve this problem. I also want to talk about just a few things that we're doing at Interswitch. Interestingly, some of those initiatives fall within the purview of the business that I work in. We have partnered with some of the best-in-class original equipment manufacturers to deploy cutting-edge technology for fraud monitoring. Already, as an organization, we have 2 fraud monitoring tools, one from ACI and the other from Featurespace. This complements our proprietary technology that we have built in-house. Also, we have a SOC center where we manage and fight off the bad guys from a cybersecurity standpoint. So you see, from an Interswitch standpoint, we are invested in this conversation around fraud. So I'm hoping that that gives you comfort as our own customers that we're doing all we can on our side to ensure that the fraud puzzle, I think Akeem spoke about the payments puzzle, is solved. Now, to speak to my question, the question that the moderator posed at me, innovation, technology and innovation really is not a strategic idea, as Akeem said. He said it's an imperative. We need to continually innovate. And one of the big things that we're proud of is our partnership with ACI. Tosin earlier spoke about the fact that Postilion is best in class, right, for payments. I'm sure you heard that. And recently we elevated our partnership with ACI, where we've acquired 6 new technologies from the ACI suite of products across sub-Saharan Africa. So it means that as an organization, we have, in fact, expanded our partnership from with ACI from a traditional reseller partnership to something that is a lot more strategic. And one of the technologies that we've acquired from ACI is Proactive Risk Manager, which during our TechConnect roadshows across Nigeria, I'm hoping that also in this one as well, we would have an opportunity to present it to you. Now, how do we help to solve this intersection between technology and regulation? I think one of the panelists was talking about our collaboration with regulators, which is, a really important point. I think it was either last year or 2 years ago, I sat on a similar panel and I spoke about the importance of strengthening our compliance function, right, as fintechs in this wise. The same way banks have strong chief compliance officer roles that have integration, that have periodic engagements with the central bank, that's also something as well that we need to look at very seriously. Fraud Awareness Week, International Fraud Awareness Week. At Interswitch, we are celebrating it in a big way, and of course, Griffith is championing it. But that's something that in our industry, all of us should create awareness for. There are several other things, that we can also leverage. Cybersecurity. Cybersecurity is one area today that we can't continue to play lip service, on. And now is the time to make the right investments to build SOC centers where we're collectively managing, our ecosystem to ensure that we create an environment indeed that is fraud-free. I think that is a Herculean task, but is one that is possible. Thank you.
Very well said, Choila. Thank you. I mean, that is what you do. You've spoken well. Griffith, I'd like to hear your views on this as well, right? I'd like to hear, based on your responsibility at Interswitch.
The first thing is to acknowledge what Toyota said. When Bankole was talking about how we collaborate with regulators and the NEF forum, I just thought it's a good time to let you know that the mother of all fraud conferences will happen in Nigeria under the auspices of Interswitch come February 2025. We would have taken the fraud week as an advantage, but it's a leapfrog for us to get to every participant in the industry. And we're working with the CBN, with the regulators, with NCC. If you realize the fraud triangle, the one we used to call opportunity, motivation, and the rest of them, the circumstances in Africa, Nigeria as an example, is changing that triangle. Maybe it's now a square. Something else has come in to change where I would rather have used motivation as my circumstance. I am now looking at my neighbor. He's not working as hard as I am, but he has a lot of money. What is he doing? HK. And then I move up to start fraud. So the forum that would come, that you would have, I invite all of you. We would spread it over the media. There is going to be something new about using AI to educate people on frauds and alerts on cybersecurity. We're going to get major players across OEMs to come together and discuss Africa's fraud problem. So it's a kind of collaboration that you would imagine would begin to chart a path that we can now tow. So while we are innovating, we are fraud-proofing our processes and fraud-proofing our systems and our products. And regulation is already ahead of us with frameworks that will make sure that what we bring out of Africa will rule the world eventually. We will re-evangelize the world about fraud-proofing of our process, our payment system as we come on.
Thank you, Griffith. So please mark your calendars. You said it's February 2025. It's almost here. Please mark your calendars. Thank you. Thank you. So my next question will be to you again, Zachariah, as CISO. Today, financial services are the forefront of innovation, but this progress comes with heightened security risk. And CISOs are faced with that critical challenge of balancing robust cybersecurity measures with the agility that is needed to drive innovation. How can CISOs balance that robust security with innovation in the financial services landscape?
Okay, all right. So in a financial services landscape, because there is always a war between, most of the time, technology team and cybersecurity guys. Maybe you run an assessment, you discover some vulnerability, maybe 10 vulnerability. The technology team will come back, they tell you they fix all the vulnerability. You run another assessment, you discover 15 vulnerabilities against 10. So all this back and forth doesn't support innovation. No, if there is this back and forth, I think the best approach to ensure that security should not be seen as an afterthought. So we should start looking at it from the shift left strategy. All your testing need to be shift left. So there is this approach that we call software development lifecycle. This security is supposed to be embedded to every stages of software development lifecycle. As you are innovating, be thinking about security. As you are developing, you thinking about security. And as you are deploying your innovative idea, maybe your product, be thinking about security. So what I'm saying is, in essence, that during the innovation, during the ideation stage, start thinking about risk assessment, what could go wrong, come up with a kind of a threat modeling, what could go wrong for this product you are launching. And as you are launching the product, you are thinking about what needs to be done. Then during the development stage, instead of you are leaving the developers to be doing their development, there are some, you can empower the developer in such a way that as you are developing and as you are debugging, they are seeing the vulnerabilities at the code level. There are some tools that can be integrated to the DevOps pipeline, to the development pipeline. So we call it static application security testing tool. You can as they are developing, definitely initially you need to train them up. You need to train them about secure coding, and so that they know how to use those tools. You can compile, you can do the integration in such a way that before they compile, if there is a vulnerability, critical vulnerability, they will not be able to compile until when they fix. So if they have that culture, so security should be seen as a cultural thing. So, and also as they are innovating, you integrate security during the development stage. You've integrated security. During the testing stage, you should not just focus on the quality assurance test. Before you do the quality assurance test, security testing should come into place. Or you can marry the quality assurance testing with the security testing in such a way that for every changes, there will always be an iteration. You can automate the process, and then as soon as you developed, there is another technology called interactive application security testing. So sorry for the mentioning we call it IAST.
You are CISO.
As technology has a self-immune system, in such a way that if something is wrong with the code, maybe somebody attacked that code, the technology will see it. It's more like you having for the fact, if you live in Africa, there's some sickness that you can't run away from, even if you, whether you like it or not, live in a very posh places. You still have malaria. Normal thing, people have malaria, nothing happens. So I'm liking the application has the capability. You can integrate such solution into the solution I've happened to work with. I'm sure that my teams also think like a bad guys. I have an internal, I think Tosin made mention about you need to regulate yourself. I have internal guys. I don't wait till the regulatory penetration testing. I have internal penetration tester, and I also automate the attack to such an extent that I can see what is going on. So you need to automate, you need to think shift left strategy, adopt the shift left strategy. Then you also need to approach security, use a zero trust architecture. Zero trust architecture means that don't trust any interaction. If there is a session going on, maybe I've established a connection between Interswitch, maybe Postilion. There's possibility that the bad guys or some funny people have taken over this stuff. For every interaction, don't need to verify any interaction at every second, at every stuff. So you need to innovate, you need to think shift left strategy, you need to look at the zero trust architecture. You also need to ensure that security is not seen after another thought. Embed embed security to every stage of your development life cycle, and also empower everybody around you. So security is everybody's responsibility. The CISO is just to regulate. So empower, what I do, I empower my developers, I empower my DevOps engineer, I empower, so that everybody start thinking security, and also as they are developing, as they are doing stuff, their technology that they are using, the technology has the capability to identify vulnerabilities, and also whether they like it or not, they will not be able to compile until when they fix all the vulnerabilities. Thank you.
Thank you very much, Zachariah. And you know that the good thing about these discussions is that we have some of these solutions here at Interswitch. Talk to us, right? We can. Griffiths, yes.
So I was just whispering to her that, look, what we have employed, Zachariah is spying into what we do. He must be doing something very strongly. We have what we call the API marketplace in Interswitch. The world is going platforms. Big techs are buying up smaller techs to create monster firms and monster platforms for e-commerce and for collaboration. And if you don't apply what he just gave freely, you would then be in trouble if you do not understand what we call dynamic testing and adaptive testing in your APIs. So trust Interswitch to apply the best of processes and technology and approach to build what you want to consume, to develop your businesses and take it further. So I was just trying to let her know that, look, this is what we are doing already. You know, I'm from the risk and security side, so when he was speaking, I was...
So again, we cannot overemphasize the need for that collaboration, right? That's what we're taking out of here. My next questions will be to you again, Bankole, and I would also like to hear your views, Oladipupo. And I'm going back to public trust, right? Fraud not only causes financial losses, but it also erodes public trust, which is a very big issue today. Public trust in institutions, in the whole financial ecosystem. And restoring this trust would require a coordinated effort from institutions, from regulators, from policymakers. My question will be, how does fraud impact that public trust in the financial institutions and the broad financial ecosystem? What measures can be taken by the institutions? What measures can be taken by the regulators and policymakers to restore and maintain trust in the aftermath of a fraud that has taken place, or in the aftermath of fraud incidents generally?
So, very good question. And, you know, trust, like I said, is the reason we're all here. That this business we're doing is all about trust. I think one of the greatest ways in which we can restore public trust is through partnerships and active collaboration. On this panel today, I've heard so much about all the technologies we can deploy, but I haven't really heard much about the human angle and human element to, you know, to fraud and managing fraud and building trust. So there's communication that can happen. We shouldn't leave that alone to the CBN. We shouldn't leave it alone to the consumer protection agencies. I think all of us as companies, we need to take advantage of, you know, Fraud Awareness Week, and the events that Interswitch will hold in February, for example. We need to take advantage of those sort of platforms to communicate, and we cannot over-communicate when it comes to, you know, how to present fraud, what to do if you've been attacked, and what to do if you're a victim, and what to look out for to ensure that you don't get attached. I think another thing we need to also communicate strongly is, as an industry, what we're doing. I don't think the public know. You know, people get defrauded and just cry and keep quiet. They don't really know that there's an opportunity for reprieve. You know, people don't know what's going on. I think a third thing again is, as we collaborate with law enforcement, it's also important that we start to think of how do we make examples of successful cases that have been prosecuted as a deterrent to new fraud actors coming on board, because a lot of times fraud is not good news. So when institutions get hit, we keep quiet about it. When we recover money, we keep quiet about it. You know, but I think it's time that maybe we all come together with one voice and speak about, look, share the bad news, but also share the very good news. How we've been successful in recovering money, how we've supported prosecution, how people have been sent to prison, etc. How examples have been made, how attempts have been foiled. I mean, you talked about, having your own penetration testing team. Maybe we need to start thinking about what we can share. Not everything, obviously, but what we can share of how there was an attempt and it was foiled successfully by, certain players, etc. I mean, for me, it's the soft side that I think we're not doing enough on. And I think we need to do a lot more. Thank you.
Thank you very much. Your views, Oladipo.
Well, I said it succinctly, but I think, again, because money is very emotional, if I want to be practical about it, I think the first thing we need to let people know is how to recover funds. So there are a lot of times that fraud happens and people don't even understand the first thing to do. They will come at you, they'll come to the financial institutions more or less like a complaint, not to even ask what can be done and stuff like that. So I think if we start with empathy in mind and help people recover funds, what would have immediately people that have testimonies that they can share. And so we start building a community of people that are, how will I put it, maybe fraud champions, right? And then, of course, consciously communicating the victories, not just the preventive things. Also being very, very intentional about the communication. A lot of times I listen to fraud jingles on radio or TV and I can't relate. So the way we communicate also matters. We need to communicate in the language of the customer. We need to communicate in a way that customers understand what it is that we want them to know about fraud and how to protect themselves. And I think that's just it, really.
Thank you, Oladipo. I think what I want to bring out from what you have said is that people need to know that, or people need to be sure that when they are defrauded, they can complain and at least maybe get their money back. People need that trust. So a lot of people, it happens to them. Someone sits in the comfort of his home and then he just sees that his account is being debited. Maybe he goes to the bank once and they tell him, oh, just fill this form. And he goes, there is no response. Maybe even goes the second time, goes the third time, and then he's unable to have any recovery done. He has lost that confidence. And maybe it's happening to someone else that says, don't worry, your money has gone. They will even tell people that it is the bank that stole their money. You understand? So people need to get to that point where they see that, oh, something has gone wrong with my money. I will get it back. I have authorities to get it back. If I get to my bank, if I get to my sponsor, whoever, I should be able to get my money back. Maybe the fraudsters would even be caught and dealt with. We should get to that point. My next question will be to you, Toila, and this is particular to Interswitch. How is Interswitch leveraging cutting-edge technologies to enhance security and drive growth in the financial space? I know this is a business you handle, right? So I'm sure you will do justice to this. Thank you.
Thank you very much. Thank you very much, Tina. This is a very high-powered panel. So by the time it gets to my turn, I'm like, okay, it has finally gotten to me. Maybe the next question I'll answer after this one will be in the next TechConnect next year. Okay, so I just wanted to add to what Bankole spoke to around building trust, which is something that is so important. Being able to be open and transparent when these attacks take place. Remember, it is our collective responsibility to protect our industry against fraud. Sometimes when these attacks happen, they happen to one institution, but in some cases, the bad actors actually have a playbook where they're testing out, their activities first with one. And if that organization is quiet about it, we see a trend where in the weeks to come, they attack another organization. So if we look at fraud monitoring and prevention as our collective responsibility, and we can be open and transparent about it, it helps us protect and preserve our ecosystem. Also, another point to talk about, which has really been spoken about quite exhaustively, but I'll just touch on it briefly. It's around self-regulation. It's around prevention. We need to always ensure that we have preventive measures in place to ward off the bad guys. Of course, we know that fraud threats are ever-changing and ever-evolving. Now, to speak to Tina's specific question, this is one thing we do very well, at Interswitch. Because we power mission-critical technology, not just in Nigeria, but on the continent, we recognize that to be able to power this technology, fraud monitoring and prevention has to be at the heart of it. When you look at fraud monitoring, we have two partnerships that we have with original equipment manufacturers, which help us protect our systems from bad actors. One of these partnerships is with Featurespace. The other is with ACI. I believe I said this in the past. So partnerships is one important ingredient to ensure that we're able to crack this fraud problem, solve this fraud puzzle. Also, as an organization, we've invested substantially in building out a SOC center, right? Where we have people who manage round the clock to ensure that cybersecurity threats are put at bay. This is also in addition to internal checks that we have around all our products and services, and that's saying a big thank you to the risk team to ensure that our products and services are compliant before they get to the market. I know that's typically always, a problematic conversation, but all our products in Interswitch are certified before they are released into the market. So on our side, this is what we're doing to try to solve this problem. Of course, we know that we're not there yet. We have to constantly be on the lookout because a lot of these threats, as we can see, evolve almost round the clock. Thank you.
Thank you very much, Tuela. In rounding up, right, I'll give everyone 30 seconds because our time is up. 30 seconds, and I'll start with you, Tuela, so don't drop your mic. As we look to the future, what's that one key action or priority that you think financial institutions, the regulators, and technology providers should focus on to successfully integrate? Remember, our topic is integrating compliance, technology, and collaboration in combating fraud. 30 seconds each. Thank you.
What is that key thing that we need to do as an industry? I think that key thing for me is, and in the Fireside chat, we got that commitment. It is to ensure that we collaborate more, we self-regulate more, we come together and we look at this problem as not the problem of the financial institution or fintech that's been hit, but we look at it as a collective industry problem. We're in this together to ensure that we create a fraud-free industry.
Thank you, Tuela. Zachariah, 30 seconds.
All right, in 30 seconds, I will just, okay, in 30 seconds, I will talk, we need to do more about people. We've been talking about people, collaboration between the tech guys and the cybersecurity guys, collaboration between the financial institution with the regulators. So people, technology, we need to also leverage on technology. The bad guys are leveraging on technology, they are leveraging on AI So we need to also leverage on technology to automate our processes, to automate, to build up a very robust cyber defense. You need to leverage on technology. You need to have like AI-driven technology. Then our processes, which is still part of the regulator. So we need to comply with all the regulations. Then the regulators, we can also make the regulation easy. What I've done in my organization, I realized that it normally takes me maybe almost close to the 9 minutes before I get my PCI, before I get some PCI DSS certification and all of that. So what I just decided to do this year, I decided, okay, I'm going to...
The way we have demonstrated to you, make sure that your other partners are as good as Interswitch, and if possible, let them do better or collaborate to make sure your products are safe from fraud.
Thank you very much. A round of applause to my wonderful panelists. Thank you so much. Thanks for gracing this occasion. Thanks for speaking your minds, as it were. I want to believe that everyone has truly learned one or two things. So we've come to the end of this session. And I think next we'll be taking a picture. I would like to stand in the middle. Blessed am I amongst all the men. Where's the middle? Thank you. Thank you. Thank you.
Once again, a big thank you to Tina, our esteemed panelist, for such an insightful discussion and conversation on tracking fraud and driving growth through collaboration. Without much ado, we'll now move on to our first industry-focused presentation. Distinguished guests, ladies and gentlemen, please welcome the Associate Director, Financial Services and Technology at Kanta, Mr. Kene Esiobu, who will be speaking on achieving sustainable business growth. Please let's put our hands together for Mr. Kene Esiobu. Please keep the applause going until he makes his way to the stage. Thank you.
Good afternoon, everyone. Good afternoon, everyone. All right, thank you, cool. So it's such a great honor to be here. My name is Kene Isiobu. I'm an Associate Account Director at Kanta. I'll explain what we do in a little bit. But before I begin, I'd just like to thank Interswitch for this wonderful opportunity. I'd also like you guys to thank yourself for also being here. So you can just give yourself a round of applause. That would be great. Yeah. So before I begin talking about how we can achieve sustainable business growth, I'm just going to briefly talk about Kanta, what we do, and why you are important for this conversation. In a nutshell, what we try to do is that we try to understand people everywhere. And we do that through containing, or rather combining, a huge amount of data from various sources. So structured data and unstructured data, talking about everything that is floating outside, what's happening online, what's happening offline. Our own data set, and also third-party data. We bring all of this together to get a rounded picture of the consumer, and very importantly, how you as a brand can understand the consumer and achieve growth in the market. And what I'm going to briefly talk about today are just two things. The first is to understand the state of, or rather understanding the state of the Nigerian consumer. Because fundamentally, as builders, as innovators, we have to understand what we're building from the consumer perspective, or from the customer's perspective, right? And the second thing is then about achieving growth in today's market. So we're going to leave you with 5 key trends based on what we see happening in the market that you can implement and begin to achieve growth. Now, explaining the Nigerian consumer currently, we can, I mean, all of us, we instinctively know that, we're not really in a very good time. We're in a very challenging macroeconomic environment. And there are 2 indices that specifically point to this. Firstly is inflation. Unfortunately, inflation is back on the rise again. As at October, it's about 33.8%. We also track what we call consumer confidence, or just general optimism, internally at Kantar, where we just go around and ask people and say, how optimistic are you about Nigeria? And what we've seen is that over the years, it's currently at around 52%. Now, this is, you might say that it's still good, in terms of, at least you still have more people being optimistic about Nigeria versus the opposite. But when you compare it to 2019, what you see is that it's actually dropped by minus 28 percent points. So that means that the level of optimism about the country is currently dropping. However, there is still opportunity for growth. Even despite this challenging macroeconomic environmental context, there is still opportunity for growth. What we see also is that when we look at the latest number statistics from the NBS, we see that the financial sector actually contributes a lot more compared to last year. Its contributory growth has grown by 88%. So thanks to everyone in this group, thanks to the entire industry, and all the efforts everyone is making, that is actually being recorded as positive growth. Now, what does this mean for the people that you're trying to make use your products? Remember, what I said is that fundamentally everything we're doing is around, because from Kantar's perspective, we speak from the perspective of the human being, right? And what we know historically is that people generally respond to this in 4 ways. The first is that, they could be squeezed, meaning that there's a lot more rationalization. Not just general, across all categories, across all industries. There's a general sense of rationalization where people are also swapping in terms of prioritizing what they want to do. Also, they could switch. So you could find a lot of switching in terms of services. So right now is a period where there's a lot of fluidity in terms of customers switching from one service to another, which could either be a net positive or a net disadvantage for you, depending on how you make use of that opportunity. And lastly, customers or consumers could scram entirely. So they could leave entire categories, they could leave entire brands based on the context and how it affects them. Also briefly, we've spoken earlier on about fragmentation, and we spoke about it in the context of the infrastructure. But also from the consumer's perspective, the market is also fragmented. And what I mean by that simply is that there's a huge amount of choice. And there's a huge amount of people offering similar services. So what that means is that competition is very intense, right? And there's a lot of pressure, right? What it also means is that innovation and specifically differentiation is very important. So it's not just enough to have a product that works. You need to have a product and ultimately an experience that differentiates you from the other competitors in the market, right? And this is what fragmentation effects have on our consumers. And what we are going to be talking about is how can we then achieve this differentiation? How can we achieve this ability to stand out among pressure and begin to find areas of growth? Because we all know a universal truth that it is quite hard to achieve growth during times of economic turbulence. It's very difficult, and we shouldn't mince words about it, but it is possible if you understand the levers and the trends to manage. Now, this is what I'm going to be talking about. I'm then going to be ending this by talking about how then can we achieve growth in today's market. I'm going to leave you with 5 key principles that are universal. Whether you are a big brand, a small brand, you're just starting up today, it is universal, and it's something that you can begin to think about. I'll explain each of these very briefly. But the first is that customer expectations are changing. I'll explain that a little bit more. The second is that security is increasingly important to customers. We've already spoken about that, but I'll still explain why that is such an imperative for customers. The third is quite intuitively, or it might make you think a little bit, which is that word of mouth increases penetration. And when we talk about this, we'll see how word of mouth can actually be more effective than even spending a lot of money on paid media. The fourth is that customer experience delivers differentiation for your business. When you think about customer experience, don't just think about it as a line item on your cost sheet, but think about it as a value driver of differentiation for your business. And the last is that in this current environment, it's about leveraging the right technology partners that will help you focus on growth. Now, talking about how customer expectations are changing, the state of play in the industry, remember, we're talking about it from the consumer perspective, right? The state of play in the industry is very, very unique and different. Typically, Nigeria has always been, if you were to come maybe 15 years ago, and you say, what are the top brands, right, in the financial sector? You'll be thinking about the traditional banks and various subsidiaries, right? But actually right now, we are in a situation where when you look at it from a customer perspective, there's a shift, right? You have digital banks being increasingly competitive. And this speaks to how those desires and those needs are changing. And especially how customers are preferring local homemade brands to more established brands. So in essence, we're in the era of the challenger brands with various local homegrown brands that have actually risen and still keep on rising to challenge established narratives. Now, why is this happening? This is happening because we were talking earlier about volatility and uncertainty. What happens when a market is going through this kind of period is that customer needs to be changing and evolving. Expectations will be becoming different. Needs, what people need, is going to be changing. People are going to become more prudent and, very importantly, more demanding. And in this context, it creates opportunity for, if people can leverage that opportunity, to actually become a challenger brand and gain market share. And very importantly, in this environmental context, for you to be able to gain people's attention, you need to be trusted. In other words, you need to go beyond the transactional nature of what you provide and begin to meet people's emotional needs. Now, please remember this, because I'm going to keep on reinforcing this point as we go on, that you need to go beyond just the products that you're providing for people and also enter and begin to tap into their emotional needs. Secondly, we've already spoken about security and why it is so important. And from a customer perspective or from a consumer perspective, what we say is that it is actually a major choice driver for the brand that they are going to use. In other words, when people are thinking about what brand to use or what brand to adopt, security is actually a major element in their mind, right? So if you're going to be able to navigate this particular experience, you need to not just be secure, but you need to give the perception of being secure. You need to make consumers trust you, and you need to make them feel secure at every point of interaction that they're having with you. So this requires a certain level of investment in security, and it requires a certain level of consistency in how that is communicated with your customers. Thirdly, speaking about word of mouth, what we have noticed is that from all the research that we've done, that when we look at the impact of marketing touchpoints, By marketing touch, I just mean marketing channels. So from TV, radio, billboards, everything. What we say is that the most cost-effective is word of mouth. And it actually drives penetration more effectively, simply because, and which is very true for this industry that we're in, because when it comes to making financial decisions, people tend to go with the person that they trust them. So if someone close to you suggests something, then that increases your chance, that increases the chance of that brand being adopted. And so word of mouth is something very key to focus on. So what it means is that negative experiences, the things about trust that we've spoken about, these things act as multipliers for how the brand is perceived in the society and how people are talking about it. So the last thing you want is that for someone to say that your platform is not secure. What you want is that you want someone to say your platform is secure, right? So through that, you're just getting free advertisement, if you want to use that phrase. Specifically, also, as we see, for those of us who are into B2B services, what we see is that sales staff is very, very key, and this is also a major driver in terms of word of mouth, because the quality of experience is about that emotion, and delivering that emotion requires a human touch. So very importantly, you shouldn't just see customer experience as just a cost efficiency thing, where you just want to streamline it as much as possible. If you're in the B2B space, you actually need to focus on speaking to people's specific needs and concerns, and that's important in this market. And customer experience, like I said, is very important because it delivers differentiation to your business. Now, you can think about this, on your own. If everyone provides services that are similar, then how then can you stand out? You can stand out through either your communication, meaning that you're saying something that another person isn't saying, or through your experience, meaning that you're providing a good experience that is better than what the competitor is providing. And this works. This is not just a global thing. This works everywhere. But what is key is what are the actual drivers of this experience. When we look at this, what is actually number one is actually providing emotive clarity. Because every customer interaction is also an emotional transaction. If someone says, I have an issue, right? If anybody here is into health tech, for instance, if one of your customers is looking for an issue resolved as regards their prescriptions, it's not just an interaction, it's also the thinking of my health is at risk, right? So emotive clarity in the kind of experience that you're providing is very, very key. And I'll explain how you can achieve that in the next slide. But what is also important is providing value for money, being seen as putting the customer first, so being customer-centric, making sure that you build everything you're doing around the customer. So understanding the customer, cross-sell and upsell, even the current customers that you have, right? And so they spent a lot of their time on crafting that experience, understanding how they could differentiate themselves from Microsoft, from Meta, from every other tech company's AI play. And then the time that they got, they leveraged partnerships with OpenAI, same with Microsoft. So that's the thinking of how this can be achieved. And so I'll just end with a recap of what we've already spoken about. The first is that customer expectations are changing. Security is increasingly important to customers. Word of mouth increases penetration. Customer experience delivers differentiation for your business, and you should be able to leverage the right technology partnerships so that you can focus your time and resources on growth. So thank you very much for your time.
Distinguished guests, ladies and gentlemen, please let's put our hands together for Kene Esiobu for such practical insights. Thank you very much. I know we're running a bit behind schedule. We'll try and keep to time as we proceed with today's, as we proceed with other items on the agenda. Our next session is titled Building Financial Resilience. It's going to be our second and last panel session of today, but So next session is titled Building Financial Resilience, the intersection of commercial and microfinance banks, fintechs, and other financial institutions. It will highlight opportunities for fostering growth in financial services. Moderating this session will be Sulayat Aliyu. She's the Principal Partner Manager at Interswitch. And joining her will be Oremeyi Aka, Chief Customer Success Officer at Interswitch. We would also have Ajibade Laolu Ajibade, Chairman of SIBI, Chief Partnership Officer at Wema Bank. And also joining Sulayat Aliyu on the panel is Fatai Barua, the Group Chief Innovation and Digital Officer, Baobab Microfinance Bank. And we would have Shamsuddin Fashola, the GM, Retail, Digital and Transaction Banking at UBA Group. And lastly, Innocent Itobore, Group Head Lending Service at Interswitch. I'd like to hand over the microphone to Sulayat Aliyu, who will be moderating this powerful session. Thank you.
Thank you very much. Good afternoon, everyone, and welcome. Welcome to the last panel discussion of today's event. I know it's been a long day, so don't worry, we're going to keep it very brief and impactful, so stay with me. The topic of our panel discussion, a very interesting topic. It's building financial resilience, the intersection of commercial banks, microfinance banks, fintechs, and OFIs in fostering growth within the financial services sector. And our discussions would basically be uncovering how the unique roles and as well as the various collaborative initiatives amongst all these key players, from the commercial banks who provide the powerhouse and as well as the MFBs who bank the unbanked, and also down to the fintechs who pushes the boundary with innovation, how all these key forces come together to provide stability and as well as inclusion despite all the various tailwinds and headwinds. So we're going to be discussing all our partnerships, the synergies, the tension, and as well as the immense opportunities that come about when all these key players combine forces together. And to make sure that we provide justice to this discussion, as you can see, we have a very powerful lineup of thought leaders across all the key industries. Please help me give
banks. Of course, still banks in their own right, but most microfinance banks are able to go deeper into the grassroots and provide financial inclusion to the underserved and the unserved, right? Deal a lot more with SMEs on that lower scale. Then you talk of the fintechs. The fintechs are seen to be the ones like, okay, driving maybe faster innovation, right? When you think of it. Now, when you paint this picture, every party is bringing value to the table, and every party needs to do that for the picture to be complete. And what is beautiful about our environment is that we are all in this together. Like you find out a commercial bank is collaborating with the microfinance space, collaborating with the fintechs, with the regulator. So everybody bringing their own part to the table makes the system resilient, and hence the customers and consumers are resilient. I hope that.
Thank you so much, Oremi. Fatai, can we hear from you from the MFB perspective?
Yeah, from the MFB point of view, basically the objective is to empower small businesses.
Yes.
So everything we do from a process point of view and also some of our technology is to empower small businesses. Mostly commercial banks. If you look at most commercial banks, above 250 million is what they currently look at. But MFB will look at anything from about 100K to about 200 million. And that is where core of our business is coming. And a lot of MFBs today are also transiting to digital banking to take advantage of more of financial inclusion. And that's work. If you look at MoneyPoint today, they also have an MFB license. If you look at PalmPay, they have MFB license. So we are blurring that line, but the bottom line is we're empowering small businesses and able to assist them to grow their business. Thank you.
Thank you so much. Shamsuddin, we want to hear from you from the commercial bank perspective. I mean, you guys are the pillars of the economy. So how are you supporting financial resilience in the economy?
All right. Thank you very much. I think Oreme has taken the whole comment. I'll just speak on two things. Number one, as banks, as you would see, we provide that platform for all the parties to play in terms of infrastructure, in terms of spread. So we have presence all over the country, for example. And when fintechs or microfinance want to operate in those environments, we provide that enabling environment. For example, for some of our partners, if you want to pick up your debit card and it cannot be mailed to you, you can actually walk into our banking hall and pick it up. If you want to use some of our rails to do your transactions, you can use any of our rails. There is hardly, for example, in UBA, there's hardly any of the fintechs that are not using one or two of our rails. Of course, as a bank, we also partner with other third parties, other technology partners. So we provide that stability in that sense. The second comment I also want to make is around the ecosystem integrity. It's important that we work together as a team. I know the last panel spoke about it. We are strong as the weakest chain in our link. Fraud today is a big thing in the industry. And the fraudsters take advantage of that weakest link. And let me speak normal English so that I don't speak all those things. Right? What these fraudsters do is to look for where they can take their money out when they get involved in a fraud. And they look for the platform that is the easiest to open account on board. And they go to your account, they go to my account, get that fund out and push it to that particular account, and they're able to withdraw it. So as a team, as an ecosystem, we need to work together. And I'm happy with what Susan said earlier today. It is not something that can be done by one person or by one institution. It has to be done by the collaboration of everyone. But we must ensure that we are not that weakest link in the chain. Thank you.
Thank you very much. I mean, you've spoken well. Please a round of applause. And, you know, like Shamsuddin rightly mentioned, at the end of the day, any payment request ends with, what is your settlement bank? And that is where they also come in. So thank you very much. And, you know, from all the answers the panelists have provided, we can see that each institution plays a very unique and vital role in shaping the sustainable growth and also driving the financial resilience. And as one of the points Shamsuddin and Arome also mentioned is that in this our financial ecosystem, it goes beyond individual effort, right? There is also a very strong need for partnerships and collaboration. So I would like Ajibade and Innocent to help us shed more light on this perspective. So my question for the two of you, starting with Ajibade, is how can all these different financial institutions collaborate to drive growth and further enhance financial resilience in Nigeria?
I just hope the smell of jollof that I'm smelling right now will not
it's
allow
time
me
for lunch.
Forget the question you're asking me. But then again, based on the things the three of them have said, they've highlighted the roles of each of the partners in the ecosystem. Yeah. And you can see that we all need one another. Because banks are big. They have distribution. As much as we try to nimble ourselves lately and say we want to innovate, to be honest, it may be faster for a fintech to innovate than a bank because of the size. Yeah. I work in Wema Bank, and at some point we disrupted ourselves. So we had to break ourselves into smaller molecules to create a lot. But a fintech, and I'll use an example that has been here. Sadly, Tosin is no longer sitting here. But look at when Tosin started. So it was easy for them to, and look at the story of Interswitch as well. So it's easy for you to grow and to disrupt. Yeah. And you can see that even people who have come out of Interswitch today, they are trying to disrupt what Interswitch has done in the past. So there's need for collaboration among all of us. When Fatai was talking, he said microfinance bank can go down. And look at everybody that has attempted to disrupt that side, that level of the pyramid. They are that microfinance. Yeah. because as a bank, there's a lot of headache that you have, to be honest. And you can't really blame us. As much as we say we are trying to do retail, because Fash is a GM retail, so he understands retail very well. But however much he understands retail, there is still a place for fintech. They can run faster. Microfinance can run faster in that space. Although he has the branch network and the distribution, this business requires close monitoring and follow-ups. So fintechs can innovate, brings to bank, for bank to distribute. There's an opportunity there, and include. So I give you another example. The regular airtime that we sell, if you go back in the days, you can buy, if you want to buy airtime now, you have to send somebody to the streets, or you have to go to the street and you see somebody selling airtime on the streets. I don't even see them again. Are they still alive? Okay. Whether they're alive in Ikeja, I don't know. But on the other side where I stay, I don't see them. So, and little things like that. Today, before, if you want to charge your NEPA, your electricity, you have to go to NEPA office. But today, you just click on one app on your phone, and then you buy. The same thing for postpaid and prepaid. So there are several opportunities and opportunities for collaboration, and we continue to collaborate together. Yeah. But as we are collaborating, because I know that some innovators are in this room, I know that banks, we are looking at you people now. You people come and say you want to innovate, you want to do this, you want partnership. We will give you that opportunity. Later, you go and be stealing people's customer. This behavior is not good. Don't be doing like that, you know? Thank you very much.
Thank you so much, Ajibade. Please a round of applause. Very interesting. You know, everything you've said accurately highlights the power of collaboration across all the three key entities. Innocent, let's hear from you.
Thank you. Well said. What I would say, collaboration is key. Key in the sense that if we don't collaborate, it will be difficult to excel, and I will explain. As a technology company, we have a lot of you from banks and microfinance banks. One of the key challenges we have seen, I've been particularly privileged to have been in the financial inclusion drive for quite some time. And especially within the microfinance space, you always see this resistance to want to be open to change. Digitization seems like a very big work, but the honest truth is that it's a journey, but you're not in that journey alone. And that's why you have Interswitch. Now, part of what we're doing today is not just showcasing and exploring ideas that we could win, to how we can win together, but also to take feedback from you and also share with you what we see in the industry that can help us win together. Drilling a bit down, I'd like to talk about lending. Today, digital lending is seriously gaining momentum within the digital ecosystem. And we have seen how that has played out. Today, we see payment being processed in billions. There's a fraction of it which is also lending. If we're looking at financial inclusion drive, one of the rails that we can take advantage of to reach the unbanked and the other bank will also be credit. Now, Interswitch has done that work. The question is, there's no point, don't need to reinvent the wheel. All we want to see is you come forth with a proposition. This is what we want to do. We have solutions that can support digital lending, from a micro lending to nano lending to buy now, pay later, even embedded finance. We're able to plug into non-financial e-commerce platform where payment can begin to drive sales for them. It's about we working together. It's about taking away that mindset of digitization is a big deal. It's not so much a big deal because we've solved the mystery. It's for us to work together and we'll make it happen and we'll prosper Africa. Thank you.
Thank you. Thank you so much, Innocent. Very well put. Digitization is indeed a journey, and we are all in this together. And you know, you also highlighted a lot of things that Interswitch is doing in this space, the technologies and the innovation as an enabler in this ecosystem, supporting different financial institutions and even startups with the tools, the infrastructures, and the connections needed to reach all the various touch points. And I'm sure a lot of people in the audience also agrees with this, and they've taken note of the various things you've mentioned. So thank you so much for sharing that. Now, as we're on the topic of strengthening financial system, there is one critical development in the regulatory space that we cannot miss out on discussing on. So this question goes to Shamsuddin. Following CBN's directive for banks to increase their capital base by 31st of March 2026 in order to strengthen the country's financial stability, what steps can banks take to successfully meet this deadline?
Okay.
Let's hear, please.
Before I answer that question, it's good to understand why CBN is asking banks to raise additional capital.
Absolutely.
Now, let me try and break it down as much as I can. Let's take this room as capital. And currently we are like 100 here, 200. Maybe in the next 3 years or 4 years or next 6 months, the next TechConnect event will require maybe 5,000 people. Can we still use this room? The answer is no. And that's exactly why CBN is saying banks to raise additional capital for the business that they are doing. When CBN set the capital at 25 billion, the exchange rate was at about 160 naira or thereabout to $1. Now we're at 1,600, 1,700. That's 10x.
Yeah.
All right? And that's just looking at it just from the exchange rate perspective. Even for the banks themselves, their balance sheet has grown by more than 10, 20x between that time and now. And CBN is saying the money you have today running that massive 10 trillion, 17 trillion balance sheet cannot support you anymore. You are now using more of depositors' funds to run your business. So go and get capital. And CBN is very specific. They are saying you cannot use your reserve. Go and raise additional cash and inject into the business. So back to your question, what can banks do to raise? You can go back to your existing shareholders and say, I'm back again. I've done very well with the money you've given me before. Give me more so I can return more money to you. That's the right issue. The other option is to say, a lot of people now love my brand. Please come and join and invest in my bank. And that's where you do public offer, right? The other option is to say, this money is just too much for me. There's a bank that we have a strategic fit, and we can come together and raise this money together. Then can do a kind of merger or acquisition. The other thing you can also do is to say, hey, a lot of fintechs are doing very well today. Their valuation is so high. Can I talk to one of them and have some arrangements such that some of those money can come into the bank and they become like a co-owner of bank? Because we are not seeing it just from raising funds just to increase capital. How can we also increase capacity? And those capacity exists outside the bank, beyond the cash. So as we're getting the cash, in terms of strategic fit, you can as well use that opportunity to get those technologies, those partnerships that I've been yearning to get. So those are the options I think banks can take.
Thank you so much. I mean, you've broken it down so well. Please, a round of applause. Thank you. I mean, this whole analogy really helps break it down to understand the reason for this exercise in the first place before we even start thinking of how to meet the deadline, and you really have broken it down so well. So we wish all commercial banks success in their endeavors as they strive to meet this new mandate. So my next question, Remy, let's hear from you, from the fintech perspective, and with Interswitch as a key player in this space. How is Interswitch leveraging digital payment solutions to empower financial institutions in their drive towards financial resilience? So not only in Nigeria, but also in other African markets.
All right, thank you. Thanks so much. And Shamsuddin, thanks for breaking it down. I've never heard it like that, so I'm enlightened. Okay, so Interswitch, I always like to go back to the reason we exist. We have a purpose, and our purpose is to inspire Africa to greatness. We believe in it. And inspire is basically to stimulate a desire for more. So we started doing this 22 years ago, and we have stayed true to it. Now, how are we empowering the ecosystem for financial resilience? We're doing it across several ways. The first is digital infrastructure, which is the foundation, right? When we started, I mean, it was just like, it was like building a road, literally. At that point, the only vehicles on that road were ATMs. So we built the infrastructure, connected the banks, and ATM transactions started. Over the years, we added other channels, points of sale, web, mobile. And then as we expanded, we started going into brands. So like you know, we've talked of Verve a number of times. For us, Verve it's not just a card brand, it's an enabler. It's a statement not just for Nigeria, but for Africans. So when Kanta was presenting data today, and I want to thank you, Kenny, you know, when he was talking of how Verve has grown over the years, it wasn't an easy journey, but it's just a testament to the fact that when there is a solution that solves a problem, it will scale. So for us at Interswitch, infrastructure that can scale is very important. On top of that, we are layering other things. We know that financial inclusion is key. So we have also positioned solutions that are allowing other smaller players come into the game. So we are not just servicing the big banks, we're servicing the fintechs. We see ourselves as a fintech of fintechs. So we are partners with MoneyPoint, with PalmPay, with Kuda, with a lot of players. And the reason we are doing that is not for us. What's in our mind is not competition. What's in our mind is there is so much to do. How do we empower the ecosystem to do this? So for us, it's really our own contribution to the prosperity of Africa, because we envisage a prosperous Africa, right? And then on top of that, we know that as transactions grow, there must be security. So the previous panel talked about how Interswitch is committed to delivering all this in a secure manner. So we also deliver security and fraud solutions. We think that's also very important. Another thing we do, we power and we support other players and regulators in the ecosystem. So in a few weeks ago, we had the Nigerian Fintech Week, where we basically supported the conversations at that conference, because that is a way to collaborate. In a few weeks, we'll be with CB at the CB conference. We are doing this, and what are we doing? We are sharing knowledge. Knowledge is a key to empowerment. That's another thing we do. Then you mentioned Africa. For us, the ground has never been Nigeria. The playground has always been Africa. Akim's keynote speech talked of why Africa and what potential we see. We are excited to say that, for example, Verve is accepted in over nearly 20 countries in Africa, not just here, acquired, and issued in a number a little less than that. We are excited to say that we have business in Kenya and Uganda. We have customers even in countries we don't have a physical presence. For us, again, it's just the question we keep asking ourselves is, if we don't solve the problems for Africa, who will? So we believe in Africa, we believe that our solutions must be relevant, and we push ourselves to make sure we are delivering relevant solutions across these different cadres I spoke about.
Thank you so much. Please a round of applause for Remy. I always like how Remy's answers always ties and reinforces Interswitch's purpose statement to inspire Africa to greatness through innovation, value creation, and excellence. Interswitch is on a big mission. Please a round of applause for Interswitch. Thank you so much. Now, as we've been talking about all the beautiful transformative things that technology is bringing, it is also important for us to look at the hurdles that comes with it as well, because every business has its own challenges. So my next question will go to Fatai, Ajibade, and Innocent. Please share with us so that we hear perspective from all the three industries, right? The challenges from the MFBs, commercial banks, and fintechs. Please share with us, what would you say are the biggest challenges currently facing the financial services sector regarding collaboration and technology? Starting with Fatai.
Okay, so for MFB, MFBs generally, because of the type of customers that we dealt with, generally, most of our constraints is around collection. So we need to build a robust collection platform.
So part of what has helped today is a direct debit in the country. Because generally what we have, and that's one of the reasons why the commercial bank don't do well, is because the legwork that it requires to follow up on some of these products is expensive. But now, because of technology, we are now building, because of direct debit, we have a player where with BVN, you can now go to customer's account in any bank and debit that based on you make sure they sign a direct debit before you give them loan. And some of the service that we provide is being able to identify these customers. And that is why KYC is one of the key things for us that we look at. So we are moving up beyond those challenges. But those are the key challenges.
Thank you so much.
KYC.
Yeah. Innocent, let's hear from you.
Yes, I kind of touched on this earlier when I mentioned that one of the major setback that we've seen in collaborating, especially within the microfinance space, is more around resistance to change, right? And in addition to that, what we've also realized is that there could be issue of trust, right? A lot of, in engagements, you would hear, oh, it takes a long while to make this happen. Does it really work? And if it works, am I still able to serve the market I'm in? Which, absolutely yes. Then a critical one again for them is cybersecurity, fraud. So I'm saying, I remember one of our experiences in one of the eastern states where we went to engage the market, and it was time for the customers to impute, and the bank was saying, be careful, because we don't know if it's an access to start hitting your account. So again, Interswitch has taken away all that concern. Not only, as Remedy has touched strongly on it, not only have we provided an infrastructure that is reliable, but also safe, where we have carefully ticked all the boxes when it comes to the platform security, the comfort it gives to you, and the ability for you to support your business to scale. So we're saying, if we can take away that distrust level and be open to change, that would really promote collaborations with us.
Thank you, Innocent. Ajibade, from Commercial Bank's perspective, let's hear about the challenges.
Challenges that is affecting the collaboration between all of us, right?
Yes, absolutely.
Good. The number one challenge is the challenge of knowing. How do I mean knowing? Fintechs and microfinance bank, they don't know that it's not easy to be a commercial bank. Yes. First, if you go and report your bank that your money is missing, obey before complain, CBN first say, first return that money back to the consumer.
Yeah.
Consumer protection.
Sure.
If you're a settlement bank to a microfinance bank or a fintech that is trying to do something, along the line, the fintech has gone to expose the services to someone, and in between, as usual, money will be missing. You recall what Shamsuddin was talking about that time. The fraudster goes to where it is easy to open an account first. So when that money is gone, the owner of the money will go and report to central bank. You are the one that facilitated, that started this transaction. Pay like a regular bank will pay. You will not move back and say, no, I don't want to pay. No, you have to pay. So it's not easy to be a commercial bank. That's where number one problem is coming from. Number two problem is that you want to become a big boy suddenly. Banks became who they are through chop by chop. So when there is a transaction, it is shared in the ecosystem. The issuer, the acquirer, the PTSA, everybody chop. But you, fintech, only you want to collaborate the matter. You see? And at that time, there will be small quarrel. Today, because I am passing my transaction through Interswitch, I must pledge funds on their behalf for me to be able to do that level of transaction. And it's understandable. If I tell you as a fintech, bring money as deposit, you say, Baba, we are just starting, help us. Help how? Help how? So that's where those problems start from. And those are the challenges we see. Then we also want to do more than we can do. Some things you can't do them as a big bank. Leave it for the smaller guys. Let them do it. But you still want to borrow to your plumber, to the electrician, to the this and that. Let microfinance get that thing sorted. and you concentrate on the building infrastructure and build financing big projects. But you still want to be doing the work that they are doing. You now go and get your finger burned. After you now go and lock up the house of that person. No, don't be doing like somebody from Mushi. Let's all of us be behaving ourselves. Thank you.
Thank you so much. Yes, Shamsuddin. Thank you.
Thank you very much. If you know him very well, you know, you know Jibade. Just to add a little bit to what they are talking about around the key challenges that we face today. For me, we are all going through digital transformation. And the biggest challenge I think we face is fraud. As we are trying to make life a lot easier for our customers, for our partners, some people have taken it as a duty. They have CEO, they have board of directors, and they have full team of fraudsters. They now offer fraud as a service. So if you want to defraud, they teach you how to defraud. And I think this is very important for us to note, as partners, as fintechs and all that. As we are thinking about making those processes easy, customer journey a lot easier, making life a lot easier for customers, let's always pause and listen to our compliance guys. I was listening copiously to what the CISO guys were talking about, the last set of people. I'm always fighting them because I'm on the business side, right? But when you sit down and look at it again, and look at the volume of money that banks are losing, fintechs are losing to these guys, huge. And some guys are getting that money, buying Range Rover in Lekki, taking your girlfriends and all that. I think it's important for us to always put that in consideration. As we are building those fantastic products, let's be mindful of those who are also checking. As we are testing, they're also testing. And when you are vulnerable, they hit you very fast and very rapid and very high. So let's be mindful of that. Thank you.
Thank you so much. Thank you. We have a very, very interesting panel members. I'm really enjoying all the answers, and I'm sure the audience is enjoying them as well. And I like that as we are acknowledging that these challenges exist, you guys are also mentioning all the different technology and the processes that are bringing about significant improvements despite all these challenges. So thank you for sharing your insights. And now, to wrap up our discussion, so sad that we have to end this. The last question of the day, let's bring it further back home. Now we're going to hear from all the panel members, starting from Fatai, and then we go down this way. So can you share one key example where technology has significantly impacted your organization's growth? Let's hear your stories. One.
So my organization recently launched a product called Jollof Plus. And it's basically a savings digital solution. And one of the things we did, we partner with all different ecosystems so that we can't do it alone. So we get somebody to build it, we get different partners to do in terms of connectivity to NIPS, and it's a very good platform and it's working well. And of course, like Shamsi said, security was one of the key things that we looked at to make sure that the system is secure and the customer's money is secure.
Thank you. Thank you. Innocent.
Thank you. Technology is all we do, right? So your win is our win. So the part I'd like to touch on, which I didn't touch earlier, is on data services. So again, data is, business decision is largely data-driven these days, and having data insight to a large extent help reduce uncertainty. It gives you more accurate view and help you predict more accurately. So I'm happy to discuss this after the session with people that would like to know more about it. We have very unique products that we have designed around data. For instance, a bank. You have huge database. How much insight do you have of this database? We have solutions we can deploy for you today that can help you understand your customers, from demographic to how they sell, to how you can design products or even improve an existing product. Lead generation is very solid for almost every business, not almost, every business who wants to grow their market share, who wants to have more customers. We have an automated end-to-end solution that can help you drive that. Depending on what your solution is and what your target market is, we can set you up and I mean, from your own end, you can generate leads for yourself. And finally, we can also, from where we sit, give you data points that will help you take more informed business decisions, especially from the area of credit. For instance, you have an individual within your ecosystem that wants to transact with you. We have bulk data service, APIs we can give to you that begin to expose and show how this person perform in terms of transaction. Of course, you know we are the big switch in Nigeria. So that's a big win for us also. Thank you.
Thank you, Innocent. Innocent heads our lending services, so feel free to latch onto him after this panel. Ajibade, let's hear from you.
How technology has helped my institution.
One key example, yes.
Just one thing,
Yeah.
Okay. I work for an organization, the oldest indigenous bank in Nigeria, called Wema Bank. And in the next 6 months, the bank is going to be 80 years old. Clap now. Thank you. Wow. So the bank has been from the days of cowrie cards, cowrie when they were spending cowrie, to old naira, to old new naira, to new old naira, new naira, e-naira. So the bank has seen it. You know, at 80, it's likely that most of your customers will either be in their grave or they are going to their grave. Yes. So technology, through the birth of alerts, has given the bank a new breeze of life. Yeah. And so today, each time you speak about digitalization, which is part of the reason why I'm sitting down in the middle, because alert gave us a fresh breath of life. Thank you.
Thank you so much. All right, me.
All right, for Interswitch, I like to say I like to speak about the way we box technology. So when we started and went to the banks, we said payments in a box, right, for the commercial banks, and also a massive rack with all the technology they needed. But now we've taken that and we've basically democratized payment. So we have fintech in a box. So are you a fintech? Instead of thinking, oh gosh, I need to issue cards, I need to do this, don't stress yourself. Interswitch has boxed it for you. Everything you need is in that box to run as a fintech. We have security as a service. So it's almost like we are taking a massive platform and we are breaking it down so that smaller players can play. So we have, for core banking, iPass, we have security as a service for smaller parties to be able to have access to these services, which on their own, they may not have been able to have access to. I'm not in sales. I know our sales team will do justice to this. But the summary of it is the fact that we understand that for everyone to win or for us to go far, we must go together. So we want to make sure it's not just the big players that are going on this journey, not just in Nigeria, but across Africa, but that every player can. And so that's why we are breaking down the modules of payments and technology and making it accessible and boxing it. Thank you.
Thank you so much. Thanks, Remy. I mean, you mentioned the shared services aspect of all our big infrastructure to make it available and accessible to smaller players. So thank you for mentioning that as well. I'm sure people in the audience have also taken notes. Shamsuddin, let's hear from you.
All right. You asked us for one example.
One key example,
The
yeah.
Interswitch gave like 5. Okay, so that makes it 12. Okay, I work for United Bank for Africa, and it's not just a bank for Nigeria, from the name United Bank for Africa. So we have the platform to take you from Nigeria to the rest of Africa, and also beyond Africa. As you may well be aware, we are present in the UK, the only Nigerian bank, the only African bank in the US, New York. We are also in France, we're in Dubai. We are going to, I shouldn't say that, right? So we are going to a couple of other countries outside Europe and America in the next couple of months. What we are offering you, beyond the fact that we're providing that rail for you, instead of you to open branches or outlets in all those countries. You can actually use technology, jump on our rails to do business in those markets. So that's one thing that has helped us to also work with the fintechs. I said earlier on that we have more than 1,000 fintechs on our platform, both in Nigeria and the rest of Africa. So we are very open to work with you, but just be ready to go through our due diligence. Once you are done with that, trust me, you will enjoy the platforms. Thank you.
Thank you so much. Thank you all so much to our panel members for sharing their insightful stories. I am 100% inspired by hearing this, and I'm sure the audience is inspired as well. A lot has been gained, a lot has been heard, so a big thank you to all our panel members. Please a huge round of applause for everyone. Thank you. This brings us to the end of the panel session.
Thank you, and well done to you too.
Thank you.
Okay, pleasantries will continue. Thank you so much. A round of applause once again for our wonderful panel. Thank you, Suliat. That was really insightful. Also, we've been here since morning. Thank you so much for paying attention. Thank you for your participation. We really appreciate the audience. I didn't hear that round of applause. Please put your hands together for yourselves for being part of TechConnect 4.0. Thank you. So we'll be moving on to our award presentation. We won't be doing the product presentations because of our time. Like Ajibade said, you know, the smell of the jollof rice is already a lot in the air. So our staff are here. You want to make inquiries as regards any of our Interswitch products, please just move to the back of the hall. We have staff from Interswitch that you can speak to make inquiries, learn more about all our Interswitch products. So we'll be moving straight away into the award presentation. And to help us in doing this presentation, I'd like to call those that will be presenting on behalf of Interswitch. In the person of Eyitayo Awe, please could you join me on stage for award presentation. Please put your hands together as Eyitayo takes the stage. Also, part of this award presentation will be Olubumi Aino. Please put your hands together as he also takes on the center stage for presentation of awards. Alongside Eyitayo and Olubumi, we would also have Oluwatoyin Fashaki. Toyin, if you're in the hall, please come up stage for the awards presentation. Please put your hands together as three of them join me on stage. We'll be giving out these awards in 3 categories this afternoon. Categories for best performance as a commercial bank, best performance as a microfinance bank, and best performance as a fintech. Best performance for commercial banks.
Yes. Good afternoon, everyone. So, in recognition of outstanding performance, we present this award to Zenith Bank. Clap for them, please. One from Zenith Bank here. Recognition for outstanding performance to Access Bank Nigeria. A round of applause for them, please. in recognition of the outstanding performance to First Bank Nigeria PLC. A round of applause for them. Who shall be receiving this on behalf of First Bank? Clap for her, she comes ahead. Thank you. Thank you.
Thank you. Please put your hands together for her as she comes.
Thank you very much, Lee. The next set of awardees, and the category we're looking at is for the fintechs. So, in no particular order, please can representatives from Money Point Incorporated come up stage to receive the award. Can we please clap for them as they come to pick up their award? Money Point, please come up stage. Okay, thank you very much. Please, can we clap for him as he comes?
Representative, please. Do we have any representative?
And the account officer pick it up on their behalf. Bagzi Bai, if you're in the room, please come up stage. Please clap for her as she comes, please. Thank you.
Put your hands together for a beautiful lady when she's climbing up. Come on.
Congratulations, Bagzi Bai. The next recipient for the award is Paystack Limited. Please clap for them. We need representatives to come up stage. Paystack. Any representative from Paystack in the room, please come up stage.
Please put your hands together for Lawale as he comes to take up this award.
Congratulations to Paystack. The next recipient, and definitely not the last, is Number Financial Services Limited. Please clap for them as they come up stage to pick up their award.
Please put your hands together as they come up stage.
Any representative in the room for Number, please come up stage. Please clap for her as she comes. Thank you very much, everyone, for your partnership with us. That brings us to the end of this session.
Thank you very much, Toyin, Eitayo, and Bumi. Thank you so much. A round of applause for them, please. Let's put our hands together. Thank you, Lagos, for showing up for TechConnect 4.0. We are gradually bringing the event to a close. Just some bit of information. Please do not be in a hurry to leave. We have lunch prepared for you. we have your gift packs as well. I'm sure a lot of us have our cards to collect our gift packs. Lunch also is going to be served, so please do not be.
At Interswitch, we keep delivering modernized They say the journey of 1,000 miles begins with a step. Over 20 years ago, we took that step for Africa. 1,000 miles later, we are still forging new paths at the technology powerhouse of the continent. At Interswitch, we keep delivering modernized comprehensive technology solutions while driving inclusive growth for African businesses. From systems
time and attention. We don't take it for granted. We know this is the middle of the week, like Thursday, and you've spent close to 4 or 5 hours or more with us. We'd like to thank our partners, our banks, our customers, the microfinance banks that are in the room. We'd like to thank Kanta for the presentation they gave. We'd like to thank you for staying till the end. And our hope and prayer is that all the conversations we had today will not end here, that they will become formidable collaboration that will lead to businesses that will further add value and hope to them. On behalf of Interswitch Management, we'd like to say thank you. Thank you very much.
Thank you very much, Oreme. Once again, put your hands together for Oreme for those closing remarks. Officially, we can say we have come to the end of TechConnect 4.0. Like I said earlier, the train, and today we are rounding off in Lagos. Put your hands together, everyone. Thank you for being part of this journey. God bless you, and let's all have a safe journey to our respective homes. Thank you. Lunch is being served, so please, we'll be going out.
Our story blooms over 2 decades ago in a humble university dorm room where the weight of the dark put a strain on our hands, a stain on the sheet where we mapped out our plans. But innovation lit our eyes with a fire to blaze the trail, to change Africa, one solution, one transaction at a time. Our ears listened to the chimes, the buzzing tune of bright ideas. We stretched out our hands, and remember what we did? We flipped the switch. We flipped the switch. It was no ordinary motion. It was to herald a new notion. It is a champion's charge, your invitation to stand on our shoulders. It is your time for elevation. So go ahead, flip that switch, build that business, scale that hitch. Africa's future is waiting on us, and what looks like the sky is only the dew. We are on the brink of something new, because at Interswitch, we never stop. So you don't stop.
Do you want to offer your customers a mobile app without building one? Simply integrate Interswitch Mobile Banking as a service. It's a unique opportunity for various microfinance banks and similar-sized financial institutions to provide best-in-class mobile banking capabilities to their customers via a single mobile application downloadable from the App Store. Your customers enjoy all major mobile banking features, such as intuitive onboarding, login services, money transfers, mobile top-ups, bills payment, self-service requests, card services, beneficiary management, two-factor authorization, and app security. Now you can offer your customers the best mobile banking experience at minimal cost. Get that ready-made mobile banking app for your financial institution with mobile banking as a service from Interswitch. Email askinterswitchgroup.com to get started. Reward your customers seamlessly with Interswitch's digital promotion system, a fully digitized and automated enterprise consumer promotions and rewards platform that revolutionizes the reward experience across value chains. With DPS, you can initiate, manage, and track multiple rewards options and winning rules with high direct-to-consumer engagements. It offers various campaign types, including code, transaction, bulk disbursement, and electronic raffle draw, with support for production authentication. Choose from a range of digital reward options such as data, transfers, vouchers, checkout codes, and many more. And you get to enjoy real-time campaign monitoring and detailed reporting. Are you ready to revolutionize your rewards program? Come Contact us today to get started with digital promotion system from Interswitch. Email askinterswitchgroup.com to request a demo today. Bringing banking services closer to your customers just became easier. At Interswitch, we offer comprehensive agency banking solutions tailored for financial institutions with a super agent license, banking license, mobile money license, and payment service license. It's our way of helping you to extend your financial services through authorized agents in a cost-efficient manner. With our agency banking solution, your agents can provide cash out and cash in services, bill payment and funds transfer services using debit cards, cash, or POS channels, leveraging our extensive switching and processing infrastructure. Now you can bring banking closer to your customers, drive financial inclusion, growth, and profitability with ease. Reach out to us to get started on your agency banking journey. Email askinterswitchgroup.com to request a demo today. Are you ready to power the future of payments for your financial institution? Interswitch Payment as a Service is here to help you do just that. Interswitch Payment as a Service is a flexible and scalable platform that integrates new systems, transaction types, and networks rapidly. It combines ACI's UPF system and ASPFEP portal, allowing swift integration for all types of financial institutions. Interswitch Payment as a Service supports immediate payments, open APIs, and Postillion SDKs. It offers visibility into transaction metrics and enables predictive analysis for accurate planning. It also eliminates the need for custom interfaces and implementation fees. Position your institution for the future of payment technology. Email askinterswitchgroup.com to request a demo today.
They say the journey of 1,000 miles begins with a step. Over 20 years ago, we took that step for Africa. 1,000 miles later, we are still forging new paths at the technology powerhouse of the continent. At Interswitch, we keep delivering modernized, comprehensive technology solutions while driving inclusive growth for African businesses. From systems integration to digital infrastructure deployment and managed services, industries stand tall on our shoulders to experience the possibilities of digital transformation. We keep building strategic bridges with original equipment manufacturers across the world, creating next-generation digital infrastructure custom-built for Africa. Our goal? To keep empowering African businesses with the technology to offer the most innovative solutions to their customers. The next 1,000 miles beckons. Join us on this transformative journey of powering African commerce and industry for the future. Interswitch, never stop. They say the journey of 1,000 miles begins with a step. Over 20 years ago, we took that step for Africa. 1,000 miles later, we are still forging new paths at the technology powerhouse of the continent. At Interswitch, we keep delivering modernized, comprehensive technology solutions while driving inclusive growth for African businesses. From systems integration to digital infrastructure deployment and managed services, industries stand tall on our shoulders to experience the possibilities of digital transformation. We keep building strategic bridges with original equipment manufacturers across the world, creating next-generation digital infrastructure custom-built for Africa. Our goal? To keep empowering African businesses with the technology to offer the most innovative solutions to their customers. The next 1,000 miles beckons. Join us on this transformative journey of powering African commerce and industry for the future. Interswitch, never stop.